Trading session. Here's the US 10-year yield, 4.95 is where we trade right now. So we are seeing some selling. The yield's going a little higher. That higher yield story, Tom, remains intact today. We saw an auction yesterday. Didn't go too badly, actually, but still the higher yield story seems to be the thing. And the Brent price is at 90.98. This is well off the highs of yesterday, of course, triggered by those lines coming out of Iran. Venezuela also in the mix. More on that shortly.
So futures, European equity futures pointing lower for a third straight day. Losses of 0.7% being flagged by the CAC futures. Here in the UK, FTSE 100 futures pointing lower by 0.6%. DAX futures being potentially lower by 72 points on these futures, Anna.
Yeah, interesting to see those futures then quite weak this morning.
Yeah.
And we're taking our lead from maybe the US yesterday and through the Asia session. The geopolitics, of course, overlaying everything. But there are these individual earnings stories. Will there be space for those to cut through today, through that sort of more macro global narrative? Well, here's where we're opening up or down on European stocks, down 0.4% on the Spanish IBEX. The FTSE 100 down by 0.2%. And we are seeing negativity on commodities, which is of interest in itself, because yesterday we saw something different. Certainly in the early part of the trading day, European time, we saw commodities going higher. Brent crude was up not far, well, mid-90s certainly. Now we're at 90.97 on Brent. We had it pushed up by the Iranian headlines and then brought back down by some of what the US is doing with Venezuela. We'll cover that shortly, as I mentioned. Here's the rising sovereign bond story, still intact as well. So we're selling stocks, we're selling fixed income, and those yields going higher. Not meaning that the investors are flooding into the dollar, though. The Swiss franc seems to be the haven of choice. We'll get thoughts from Mark on another occasion on that front. I know he has some, but that's what we're seeing. Fairly range-bound on FX, but elsewhere we are seeing some movement. A sort of sell everything day then, Tom. What do you see on sectors?
Just one sector in positive territory and only by a hair, and that's technology. And we look, of course, at the read across from TSMC, the chip makers in Europe, maybe getting a bit of a lift on the back of some optimism coming through from TSMC on that AI input and the expected demand coming through there. The downside really pronounced around industrials. We're looking, of course, in the telco space at Nokia. They came in with a miss. They're cutting headcount as they try to reduce those costs, the big R&D spend around the infrastructure build out there. Basic resources down 0.4%. Construction materials down 0.8%. So pretty heavy losses in that sector as well. Financial services down by 0.7. Banks in similar territory, off by 0.6%. And autos, Renault was a miss. That's going to be a drag for the CAC current over in France. Autos as a sector down 0.8% on France. The CAC current now down 0.9%. Interesting as well to hear just how glum Elon Musk of Tesla was about the prospects for further demand around Tesla, despite those price cuts. Across your benchmark, down 0.7%, Anna.
Okay, let's talk about the markets. Negative picture there just behind Tom, with all those sectors behind him at that point. We're in negative territory, although you mentioned the standout technology sector was doing better than others. Sophia Halter-Acosta joins us then from our Markets Today team and can talk us through what we're seeing in markets. And Sophia, let's start with some fallout, I suppose, read across from the UK CPI print yesterday. It was a little hotter than expected, wasn't it? And we saw yields go higher on that. We've seen yields continue to go higher on that and what's been going on in the US and the Treasury curve as well. Your thoughts?
Yeah, exactly. So the higher for longer narrative really kind of crossing markets right now, and that was reinforced by yesterday's CPI print, even though it was basically just a rounding error. It was a very, very, very small miss to the upside. But the FTSE 200, that's FTSE 250, I should say, that's the one that's more geared to the UK economy. That fell to the lowest in a year yesterday. More weakness today. House builders, they fell the most since May, more than 4% yesterday. Again, more weakness today. And actually, if you look at the difference between between the FTSE 250, that's the domestic index, versus the FTSE 100, which has very little to do with what's happening in the UK economy. The gap there is the widest in 9 years, the underperformance on the domestic front. So nobody really wants to buy domestic UK. Everyone's looking at the FTSE 100 because of how it benefits from a weaker pound and higher oil prices.
And that ties us into the next story. We can pop the champagne here in the UK because we've regrained the crown around market cap versus Paris. We just need the camera operator kind of zoom in on Anna's sceptical eyebrow raise on the back of this story.
Well, I know. You can tell us the details of the story, Sophia. It's just it just catches my eye that back in 2014, 2015, the London market was twice the size of Paris. So I'm not sure we're ready for the champagne just yet, Tom, although
maybe some fizzy water.
Maybe, yeah, there we go.
I mean, so both lines are sloping downwards, right? I think that's where the skepticism is coming from. This is not because suddenly the UK stock market is doing particularly well. It's just doing a little bit less badly than France is. But London is finally, once again, Europe's biggest stock market. This has a lot to do, because this index is denominated in dollars, so this has a lot to do with oil. Again, I talked about how the FTSE 100 tends to benefit from higher oil prices. I don't think that story is changing anytime soon. So, Anna, your skepticism also, I mean, let's not forget what's happening in France. The luxury sector there also out of favour because of weakness in the US markets and also in China.
Meanwhile, commodities doing better.
Exactly.
And that benefits London.
Oh, which brings us on to soft commodities.
That does, doesn't
and
it?
the newsroom's favourite inflation indicator. And there's scepticism from Anna here on this one as well. Sausage and mash. Sausage and beans. You don't mash, do you? With
no,
the
you
fry?
don't mash.
Sausage and beans and eggs. The breakfast indicator, what is it telling us about food prices?
So food prices are slowing. They're still increasing, but increasing at a slower pace. So the full English breakfast has become cheaper. I don't know if any of us have a full English breakfast. I think we'd all be half asleep by now. But the fry-up is...
Not before the show.
Not before the show. The fry-up is now just under £36. That's, of course, assuming that everyone eats a dozen eggs in the morning.
There is a lot of food in this fry-up, I should just point out. Yes,
there's
Sophia,
a lot of sausages and a lot of eggs. But again, the picture here is that price pressures, at least for households, English households, are falling. This could be, we like good news, Anna. Good news for UK consumers heading into a key spending season for Christmas. And if people really want to have a dozen eggs for breakfast, then they can pay less for it.
Yeah, the reason this is so expensive, it is made up of a dozen eggs, a kilo of sausages, and an entire loaf of bread, and that's just for starters.
It's a big family.
But
Anna.
the point is that the price of all of those things has been coming down at the edges, so that is good news for consumers and ties into where we started the conversation on UK CPI. Sophia, thank you very much. Sophia Horta-Acosta from our Markets Today blog. You can find more from the team that puts together the blog. Go to the front page of the Bloomberg UK website, click through to it from there, or you can type TLIV Go on the Bloomberg terminal. Tom, what are we watching for on the agenda today?
Yep, some other big data prints and conversations, speeches as well to flag for you. 1:30 p.m. UK time, US data, including those initial jobless claims which are rising in states in particular where that United Auto Workers strike is generating layoffs. That strike does continue. At 5 p.m. UK time, Jay Powell, the Fed chair, is going to be speaking as well at the Economic Club of New York. We'll see if he reiterates the higher for longer mantra that we heard from the New York Fed president overnight, or if indeed he talks about the work that's been done by the higher yields in terms of tightening those financial conditions. Bloomberg Intelligence sees Powell sticking to the theme that rates are at or near the peak. And after the European market closes, we're going to be on the lookout for third quarter earnings from L'Oreal. Barclays analysts see nervousness around the outlook following recent disappointments from Estee Lauder and LVMH, a story that Sophia was just touching on in terms of the play-in to the market cap over in France. So earnings, Jay Powell, and the data come through from the US, Anna.
Yeah, really interesting to see whether Jerome Powell does have anything to add. Well, probably he won't want to go anywhere near the theme of geopolitics, but interesting to probe as to whether he thinks any tentative thoughts around whether there's a sort of inflation watch intensifying as a result of this, and I'm sure that's something that the Fed is watching. What he's able to say in public, we'll have to wait and see. But of course, what he says about rates and how close to the end we are on that rate hiking cycle, Tom, crucial. Of course, the story we've heard from a lot of rate policymakers over in the US has all been about how financial conditions have been doing the Fed's job for it. So we'll certainly watch to see what he has to say there. Coming up on the programme, China's home prices drop at a faster pace in September, adding to doubts over whether Beijing's steps to prop up the property market are enough. We discuss next. This is Bloomberg.
adults are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg.
Today, the Economic Club of New York hosts a conversation between Fed Chair Jay Powell and Bloomberg Wall Street Week's David Weston. Recession risk, inflation outlook, real estate amid high rates, and more. The live interview happens today at 12 p.m. Eastern on Bloomberg. Context changes everything.
This is markets today, 8:11. They're 11 minutes past 8 here in London. So European equity markets just into their trading day and on the back foot this morning. The FTSE down just under 1%, in fact, as is the CAC 40. So some real weakness coming through. US futures, incidentally, flat to negative, but they did worse yesterday. So we're pricing in some of that here in Europe as well. Let's get a check on how some of the individual stocks are doing. Joe Easton joins us with a look at some of the stocks on the move. And there's plenty of big macro themes to trade around, but also the specifics of earnings season to the fore then, Joe.
Absolutely. So there's lots to look at today. Nestle declining at the open as expected after they report their worst sales growth in around 3 years for the maker of Kit Kat and also pet care products as well. Meanwhile, Pernod is actually jumping. Now that's quite interesting. Their US sales did decline once again. However, analysts at Jefferies noting that their commentary around the US market is actually improving at the moment. So that one is gaining. Roche is a decliner. The executive speaking earlier, they have seen a decline in some of their eye care drugs, so that one is hitting that. Also, the COVID benefits waning. SAP is the German software company, reported after the close yesterday. That one jumping, bit of green on the DAX index today. Enterprise software doing okay over in Germany. On the second board, we have got a eclectic mix here now. London Stock Exchange, volatility pretty low at the moment, and that does weigh on the exchange volumes. We also saw Deutsche Börse, both of those not looking particularly strong. And then Nokia with those job cuts, that stock down 2%, even though that might save them around 400 million euros from next year, according to the company. Hargreaves Lansdown is a big decliner in London, potentially people cutting back on some of their investing given the cost of living crisis. They've got a trading update. Looks a little bit soft today. In the telco space, Telia, now they're pretty strong, which is quite interesting given that Nokia is reporting weakness in the telecoms customers, but Telia saying everything's all good at the moment, and that one rising at about 5% over in Stockholm. So I say there's a lot to get through at the moment, but we are doing our best. So Renault, this one, they did report some soft sales, as we said, actually gained but missed analysts' expectations. A big decliner over in Germany is Uniper. Now the German government potentially looking to exit their stake, and Uniper will reduce their share capital. Bit of a technical adjustment on that one, but down 27%, the biggest mover that we'll see today. ASML comes back up a bit after that drop yesterday, their biggest drop in around 6 months following weak sales for the chip machinery company. Now, we also had TSMC numbers boosting that sector, and then just one broker move, which was interesting to me. EasyJet downgraded over at Barclays to equal weight. That's one of the cheapest stocks on the London market, but even Barclays saying they don't like it, potentially because of the oil price rising and EasyJet slipping today.
Okay, Joe Easton from our Exeter team, thank you very much indeed for walking us through some of the individual movers in focus today. Let's get back to the macro, though, and with a focus on the real estate crisis that continues to engulf China. China's home prices dropped at the fastest pace in a year in September. Home sales and property investment remained a drag on economic output last quarter, underscoring why policymakers have taken steps recently to rekindle demand in the struggling sector. Joining us now is Carlos Carranza, Portfolio Manager for Emerging Markets Debt at Allianz Global Investors. Carlos, always good to get your thoughts on what is happening in the EM space. And so we start on China. We have had the economic data, it's worth noting, coming in stronger than many had expected this week, and signs that maybe there are green shoots more broadly across the economy. Real estate clearly remains a drag. Do you want to be buying Chinese assets on the improvement, the broader improvement in economic data, and look past the real estate crisis?
Yeah. The answer is yes. I would say the following. The news that we have had on the economic front are much larger compared to what's happening in the real estate sector. So the fact that there are some companies which are struggling in the real estate sector is nothing new, really, in my opinion. We have been pretty much over the last 2 years, China since mid of 2021, where we had the Evergrande news, China has been undergoing a reshaping of the real estate sector. So the fact that some companies are still struggling, I don't think it's new news to the market. Whereas what really is good news and new news is the fact that China has grown 4.9% of GDP in the third quarter of this year.
Okay.
And IP came really strong, above 5%, 4.5% for September. And retail sales came at 5.5% for September. And we had 2 consecutive months of strong growth data. So August and September both have shown really strong numbers for China.
Okay.
And I think that's much higher than the impact of a sector that has been struggling for at least 2 years.
Okay, so you think that that's more important then because the real estate story is priced. I suppose I then ask, is the real estate story priced if it is ring-fenced? Because what if the tensions in that sector spill out into other parts of the economy?
Yeah, it was a good question. I would say this. One way to see what the impact can be on some of these real estate companies which are struggling is to see what's happening with bond prices after, for example, they get into the point where they default. And if you see these recent news of Country Garden, for example, Country Garden bonds have been trading 10 cents on the dollar for the past 2 or 3 months. And they have been trading close to defaulted levels since July, pretty much. So when you think of ring fencing, obviously it's extremely difficult to think that one sector so big can be entirely ring fenced, but it can definitely be priced in and not be a surprise to markets. So there are certainly economic implications for it, but when you balance out the economic news, the impact of GDP recovery, IP, retail sales, versus a sector that has been struggling for 2 years, you would say, well, my impression is there's definitely good news coming overall.
Look, we want to expand this conversation beyond China, but before we do that, so what do you buy? You say yes, you buy Chinese assets. What assets would you want to be adding?
Well, for example, I think that when it comes to the currency, I think that we discussed last time, there's some stability in there. I think that there are some specific names on the, maybe moving away from the real estate sector, but there's some specific names, including, for example, the exports into the U.S. that should be considered. And overall, if you look at the level of yields for sovereign bonds, I would stay away from those. But just because the level is too low, I would keep underweight positions in Chinese local currency bonds, purely because they trade at a yield that would make no sense compared to other EM assets.
Often when we talk to you, Carlos, we focus on, we talk about emerging markets all over the world, as we've just done with China. But let's go to Southern America, to Central America, where I know that we've talked to you about in the past. And I want to ask you your thoughts on Venezuela. This was a story that moved oil markets yesterday. The U.S. suspending sanctions on Venezuelan oil to some degree, gas and gold. Nicolas Maduro, it seems, after 10 years of what have been described by many me as repressive policies seems open for open elections, and the US rewarding for this stance. What do you make of these moves in Venezuela?
So there's the headline news and there's the medium-term challenge. Headline news is great. I will put it that way. It's simply great news for Venezuela. So it has a direct economic impact, which is that for the first time in 4 years, Venezuela will be able to export to the US. And that's undoubtedly positive news from the macro point of view. And there's also, from a bond market perspective, this is great news for bond investors because it will allow US investors to buy bonds in Venezuela, which is the first step towards normalization, towards Venezuela being able to get international funding, to be able to include itself again in the world markets, right? So that undoubtedly good news. Now, the medium-term challenge is that this is a temporary agreement, and Venezuela has a lot of room for improvement when it comes to institutional transparency, right? Institutional transparency. There's a lot of room to improve on that. For example, they need to set a date for elections in 2024. They need to make sure that those elections are transparent, that there are international institutions supervising the entire election process. They need to restore the political rights for the opposition. One thing we have had in this past decade was that opposition leaders generally did not have an easy ground when it comes to opining against the government. That needs to improve. But definitely the headline news is great, and there's room for more of this. Hopefully
so there's the headline, and then there's the implementation of some of those measures that are needed, in your view. We have to, of course, ask you about what's happening in the Middle East and how the emerging market world is adjusting to that. And we've seen some de-risking across EM assets on the concerns emanating, of course, around the Israel-Hamas war and whether or not, of course, that escalates. Where do you think we are in that de-risking process, and what parts of the EM world are most vulnerable in an escalatory environment?
Yeah, so I would say the following. If you look at, I certainly hope that there is a quick de-escalation of the violence. But if you look at emerging markets and what the focus has been, it's interesting that, for example, if you look at DM markets, we have not seen a typical flight to quality pattern, right, where U.S. Treasury yields rally and emerging market yields sell off. In fact, U.S. Treasury yields have been selling off this past week. There was no flight to quality. If you look at EMFX, emerging market currencies, we have not seen significant pressures across the board in EMFX. Some currencies, if you look at last week's performance, BRL is flat, Chilean peso slightly stronger, Polish, the zloty PLN is slightly stronger.
Its own dynamics, yes.
Own dynamics. But overall, the asset class has not seen that many pressures, right? And for example, there's still demand for EM bonds, right? So yesterday, Saudi Arabia placed a bond that was 10 times oversubscribed. They placed $2 billion for a $20 billion position. So my point is, we have not seen that there is so much deleveraging, and markets tend to believe, by price action, you would say, there's the expectation that there will be a de-escalation of that, and I certainly hope that is the case.
Carlos, thank you so much for your time. Carlos Carranza, Portfolio Manager for Emerging Market Debt at Allianz Global Investors. Coming up, we'll get back to the earnings stories. TSMC posts better than expected net income in the third quarter, boosted by high demand for AI chips. Details next. This is Bloomberg.
On the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Welcome back. Now, TSMC posted better than expected net income in the third quarter after demand for artificial intelligence chips remains strong. Let's cross over to Bloomberg's Avril Hong with the details then. Avril, what are you seeing from the results?
Yeah, it's beating on profit and margin, and this has a lot to do with the weakness in the Taiwan dollar, which gave a boost to those gross margins. But on the earnings call, we also hear about how these executives actually see this sign of a bottoming in the slowing that we see in the semiconductor industry. So perhaps some cause for optimism. They also gave these quarterly projections, which beats the estimates. So a bit of a turnaround compared to this wall of pessimism that we were expecting coming into the results. I mean, just a day ago, we had ASML compounding those very concerns, given how their orders plunged. And ASML, of course, counts TSMC as a big customer. So in a way, allaying those fears for now, at least, on the semiconductor industry.
Yeah, after ASML's numbers, maybe expectations were reset a little lower. All this then, as traders, we understand, have turned a little more bearish or increasingly bearish on the stock. Briefly, Avril, what's the story there?
Yeah, I mean, since June, where we saw the high on TSMC stock, it's come down about 9%. We see how tens of billions of dollars have been wiped off its market cap. We also see how its put-to-call ratio is near the highest level this year. So there was a lot of bearishness on the stock of TSMC. We might see some recalibration given how these results have come in and things look a bit more optimistic here. But there are still those concerns, I think, given the weakness that we see in Apple and NVIDIA potentially as well. So we'll have to see how the trade comes in tomorrow.
Avril, thank you very much. Bloomberg's Avril Hong in Singapore. Coming up, Tesla misses estimates as Elon Musk dials back growth expectations. We'll bring you details next. This is Bloomberg.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of power. Live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lines.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Markets Today. We're 30 minutes into your European trading day. Here are your top stories. Tensions simmer in the Israel-Hamas war as President Biden's visit fails to win over Arab leaders. The UK Prime Minister touches down in Tel Aviv to begin his Middle East tour today. Earnings underway. Tesla misses estimates as Elon Musk dials back growth expectations. Meanwhile, Netflix posts its best quarter for subscriber growth in years. Plus, chip giant TSMC posts better than expected net income in the third quarter as demand for AI chips remains strong. Tom, so there's the TSMC story, which perhaps seemed better than anticipated. A number of disappointments, though, elsewhere in Europe, and perhaps the geopolitical nervousness, the higher rates environment, hanging heavily on these markets this morning.
It does seem like that's that combination of factors, and it's hard to really land on exactly what is leading the downside. But we are set at this stage for a third straight day of losses across European equities. Here's the downside then across the benchmark, 0.7%. But as Anna was saying, there were some idiosyncratic stories coming through in the corporate space on the back of the earnings picture. The DAX is down 30 points, down 0.2%. And here in the UK, the FTSE 100 at 7,521, down 0.9% now for the FTSE 100. Across your sectors then, let's flip the board and see how things are shaping up, because it is technology that remains the only sector, the only major sector in the green at this point. The gains of 1.7%, tying, of course, to what Anna was saying about TSMC, the uplift coming there in terms of the demand for those AI chips and what that means, the implications for the European tech sector, chip sector, and a lift there coming through for the sector, 1.7%. Basic resources down 0.4. You're seeing a bit of a hit to energy as well. Brent prices coming off a little bit. We know there have been some easing sanctions around Venezuela to try and get a little bit more of that oil onto the market. Energy down 0.7%. Of course, the geopolitics and the conflict in the Middle East remains firmly in focus. Autos down 1.8%. That is a drag on the CAC Cahon. We have Renault dropping quite significantly. The last time I checked, that stock individually was down around 6%. Banks also lower by 1.3%, and that is weighing on the FTSE 100. Again, the benchmark here in Europe off by 0.8%. A big hit coming through for France. The CAC Cahon off by 0.9%, and the FTSE 100 in similar territory. Anna.
OK, let's move away from the earnings stories and get an update on the Middle East. UK Prime Minister Rishi Sunak is the latest world leader to head to Israel. He has landed in Tel Aviv for a two-day visit to the region as part of a global effort to prevent the Israel-Hamas war from escalating. Let's get the latest then on the ground from Bloomberg's Oliver Crook, who's in Tel Aviv for us. So looking back to Biden's visit and ahead to Sunak's visit, what's the latest, Ollie?
Well, I think we can combine probably these two with Sunak's visit now in focus because he's here today. But if Biden himself was able to achieve really not that much in terms of concrete outcomes, it's hard to say what Sunak can. What Biden was able to do was to deliver, one, a message of support for Israel, which is what was sort of expected. And second, also, again, reiterating the U.S. policy on deterrence, which is really summarized in one word, don't. which he repeated 3 times at his press conference yesterday. The question about, in terms of more palpable outcomes and what we were hoping for, was potentially some progress on aid, the aid that is still sitting there on the southern border of Gaza with Egypt that cannot move through. We understand that there was some sort of agreement on the Israeli side to allow, create the conditions for that to move through. We understand that President Biden also spoke with the president of Egypt about this, who also agreed in principle. But again, 13 days into this now, that aid has still not moved through. And that's where we go into the disappointments of the trip. This trip was also supposed to have a diplomatic component in Jordan with Arab leaders. That did not happen after the hospital blast in northern Gaza, where basically upon which that summit was entirely canceled. But the one thing that I did find interesting from Biden's speech, after he had discussions with the war cabinet within Israel, he recalled 9/11 in the United States. He obviously recalled the tragedy, but he also said that in seeking justice, the United States made a number of mistakes. And this was the sort of warning and advice to Israelis on how they go about this. He said that the objectives need to be extremely clear as we gear up for whatever the land incursion in Gaza could be. The objectives need to be clear, and throughout, there needs to be a questioning of whether the path that Israel is pursuing is actually in service of those goals. And we'll also pay attention to later when we expect to hear from Biden from the Oval Office. We understand also that he's going to bring to Congress a bill for $100 billion worth of aid, not just to Israel, but also to Ukraine and other parts of the world, as well as the border wall in the United States. So that'll be really front and center later today.
Yeah, really interesting to hear from the US president around the rage of the Israeli people and the Israeli government and how to channel that rage. And as obviously Ollie rightly pointing out, of course, to the need and the desire to get that border open for that aid. Oliver Crook on the ground for us in Tel Aviv has been tracking all of this for us across these last few days. Let's get some more of the other top red stories then. On the Bloomberg terminal, the founder of Country Garden has met with the head of the China National Agricultural Development Group. The developer said it is looking to deepen cooperation with the state-owned firm. On Wednesday, Country Garden signalled it is set to default on a dollar bond after warning it would not be able to meet all of its offshore payments on time. Now, several Republicans are preparing to enter the race for US House Speaker as Trump loyalist Jim Jordan's bid unravels. Jordan, who was endorsed by former President Donald Trump, has remained in the race despite losing support, with 22 Republicans voting against him, 2 more than on Tuesday. But he insisted he's not dropping out of the race. Several Republicans, including House Budget Chairman Jody Arrington, are seen as possible candidates. And the creators of South Park are in discussions with Carlyle Group for a private loan totaling around $800 million. Sources told Bloomberg the money will be used to refinance an existing credit facility and fund a cash payout. The loan would be backed by various assets, including intellectual property from the hit TV show.
Let's return to some of the earnings news this morning. Tesla disappointed with a miss on profit and sales. CEO Elon Musk is dialing back expectations as years of rapid expansion collide with rising interest rates. Joining us now is Bloomberg's Danny Lee, who can bring us the headlines and what they mean. Danny, what are the key earnings highlights and takeaways then from that important earnings call with Elon Musk?
Yeah, good morning, Anna. So everyone's been talking about the Cybertruck. Elon Musk gave an update on the earnings call yesterday and talked about the Cybertruck that's going to be delivered from the end of next month, though he also cautioned that it's going to be a bit of a drag on earnings for the next 18 months or so. And that Cybertruck news, which is 2 years late, has actually helped kind of mask some of the disappointment in the earnings and sales miss that we heard overnight. So this was always going to be a challenging quarter for Tesla because sales was lower because it's been preparing and upgrading its factories for a new model rather. So we were expecting that. And also Tesla has been pretty skittish by constantly changing its prices in order to, as Elon Musk has said in the past, defend market share and also to boost sales by cutting into margins. So we saw the impact of that rollout in last night's earnings announcement.
Okay, Danny Lee, yeah, it was really interesting to hear just how glum Elon Musk sounded and talking about digging their own grave with the Cybertruck. Danny Lee breaking down the earnings coming out from that automaker as well. Thank you, of course, for the latest there. Let's stay on the earnings picture, though, and bring in the Netflix story. very different picture, raising prices for some customers after posting its best quarter for subscriber growth in years. It is a sign of management's confidence in the future, even as rival streaming services lose money. Bloomberg's Thomas Seal covers media and tech for us and joins us with the details. What stood out to you then, Thomas, from these earnings?
I think it's showing that Netflix is kind of increasing its lead. It's consolidating its position. Rivals are scrambling, making cuts, selling pieces of their business. You've got Warner Brothers Discovery integrating, pile of debt, Disney looking at non-core assets. Meanwhile, Netflix is flexing its muscles. It's increasing. You know, we all have a plot twist. No one was expecting this in a Netflix show. And meanwhile, they're working on some really interesting kind of things for the future. Maybe they've got video games. They've got their first live sports event they announced this week. It's just a kind of exhibition golf tournament, but you know that's a massive market if they start to really get into that. So yeah, I think it's just really reassured shareholders, and we saw the stock go up 12% after.
It's interesting, isn't it? We've seen what the Netflix effect can do to certain sports, so it'll be interesting to watch golf then with that in mind. And the after-hours market clearly like the plot twist as well, sending the shares higher. In other parts of your tech beat then, Thomas, let's talk about what's going on at Google, because Google Pixel is going to be manufactured in India then, we understand. And this is a sort of a sequel, to keep with some of the media metaphors here, but this is maybe a sequel to what we've heard from Apple.
Exactly, yeah. And it's showing that these massive tech companies want some competitive tension in the market, I think. You know, you can't have... And it's not just that. There's other dangers in reliance on China. We've had production shutdowns after COVID and the long aftermath of that, and also the trade war, you know. So I think, along with financial incentives from Prime Minister Modi, this looks like a sensible move, and, you know, perhaps we'll see even more of it.
Yeah, certainly good news for India, and it's pushed to kind of make in India as well as they build out their manufacturing capacity. Thomas Seal, thank you very much indeed. With the earnings there coming through, the beat coming through for Netflix, and what that could mean, the implications of Google building out its phones in India. There's going to be plenty more. We're going to have a deep dive on the AI topic as well, and just whether or not we're seeing froth in that market. We'll speak to one of the leaders in the AI space just in the next couple of minutes. This is Bloomberg.
Okay, so you're moving in on me quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knights.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
Welcome to Balance of Power. This is Bloomberg.
This is Markets Today. 42 minutes into the European trading day, you're seeing losses across the European benchmark. The stock 600 is down now 0.9%. Let's get to the AI story then. Bloomberg has learned that OpenAI is in talks to sell existing employees' shares at an $86 billion valuation. The artificial intelligence startup behind ChatGPT is currently negotiating the transaction. Over in the UK, Prime Minister Rishi Sunak is pushing for nations to label artificial intelligence as capable of catastrophic harm at the AI Safety Summit the UK is hosting next month. That's going to be on November 1st and 2nd. Let's bring in now Armando Gonzalez, the CEO at Ravenpack International. It's a company that is the leading provider, one of the leading providers of big data analytics for financial institutions using AI, so big banks, hedge funds. Armando, thank you very much for joining us in the studio. And it's worth noting that you and the team have been doing this since 2003.
That's right.
So you're long in the tooth when it comes to AI. Are we seeing, in terms of the fund flows, in terms of the hype around generative AI, are things starting to look a little frothy at this point?
Look, I mean, there's always hype, especially when it comes to AI. It's not the first time that we've been through a cycle like this. But what's very exciting about what's happening is that we now finally have a technology that is easy to use. It's becoming available for everybody. And more importantly, those that have built good infrastructure, data infrastructure, could really leverage these tools to get real insights from what we call big data, right?
Okay, and so give us a sense of how your clients use the data that you provide to get insights. Because I was reading in terms of the business that you take unstructured data and you turn it into something that is actionable. Does that take you into tricky legal areas if you're trying to get data from certain sources? How does it all work?
Yeah, so we focus primarily on publicly available information. That means that our systems are analyzing and collecting information that is available to everyone. But we also partner with premium content providers that have basically content you can only find behind paywalls. That means that our systems license content. They use the most high-quality information available to market participants. And as a result of the high quality of the content, you're able to generate interesting insights that are useful for market decision-making.
How are some of your clients' demands changing on the back of all the excitement around ChatGPT? You've been pitching ideas and your services to them, obviously, for 2 decades. Yeah. How is the demand? What are the services they're looking for now on the back of this evolution, this revolution, some would describe it as?
Right. So we serve about 70% of the best performing quantitative hedge funds in the world, right? They've been using Ravenpack for, more than 2 decades. And that means that the data that we produce from publicly available information can sometimes have, different types of impacts. But when you use AI and the more modern AI, you're able to detect new emerging trends and patterns much faster, right? And there's also connections between the data that weren't easy to detect with old school machine learning models. With the new models, you're able to detect connections that no human would be able to understand, right? So these machines are really helpful tools for investors to figure out what to do in a world where it's becoming more difficult and harder to make decisions when you're overwhelmed by an information overload society.
It was interesting that Tom was saying just how long your business has been around for, because it feels as if, the AI conversation has just become so much more mainstream than it was 10, 15 years ago and even 5 years ago. And I wonder how that changes the types of clients. I think you used to sell more to quants and now maybe there's a broader range of customers coming forward. How is that changing?
Absolutely. I mean, first of all, we started developing these types of technologies, doing the research and being the thought leaders. Most people were worried about AI and how it could be used, but now we finally have a little bit of tailwind, and that means that more investors are interested in what we do and how they can use it. The key here is to figure out how to disseminate the insights in a simple manner, right? And natural language interfaces are making that possible. You can now ask a simple question and have a model do a very complicated task, and the answer is actually easy to use. So discretionary investors, what we think of as more fundamental investors, are able to take advantage of these new technologies.
Amanda, just zooming out from Ravenpack and what you guys do, is there a risk, is there a concern that some are underestimating the economics of AI? Because yes, you have those user-face platforms, but underlying that, the models are trained on chips, and the compute is very expensive, and often we don't know what the outcome is going to be in terms of the revenue stream payoff, essentially, from all that investment. Is there a risk of underestimating the economics of AI?
Yeah, I mean, it feels a little bit dot-com-y in a sense, right? Where we had all this hype around these technologies, but nobody was really thinking about how to commercialize it. Now, and if you're just trying to come up with problems that don't need necessarily solutions, I think that's not going to work out. it's important that we have like proper solutions, real problems that AI has identified and that can be useful, whether it's productivity or time efficiency improvements. More importantly, that you have a real technology base and customers that want to use it and are willing to pay.
What are the new markets then for Ravenpack?
I think for us, it's all about big data and ecosystems, creating high-quality content aggregation systems that allow people to monetize content in new and unique ways, as well as making it affordable, right? Democratizing the use of big data, I think, is key.
On regulation, where should the focus be? Where should it land? Should it be on the underlying technology? Is that where the regulatory scrutiny and the guardrails should be put in? Or is it the use case? Is that where the focus should be? Where do you land on that debate?
I think it has to be use case driven, right? You need to see and understand how are people using the data, how are people using the models. Privacy is a big concern in terms of how you source content. Licensing is going to be an important part, making sure that if you're using data and it's being monetized or commercialized in a certain manner, that everyone gets paid. This needs to be a sustainable model. Right?
On that similar subject, we're heading towards the conference at Bletchley Park at the beginning of November. We've seen these headlines this morning that suggest the UK wants AI businesses to have a label to attach to them, talking about catastrophic harm. I wonder if you reflect on that or the broader aims of the Bletchley event.
I mean, you need to think about, again, use case, and the more important is if users are actually taking advantage of these technologies and using it for good, right? That there's a real application, that there's no evil or harm intended with the use of AI technology. I think that needs to be embraced and supported.
One last one on funding plans. You're profitable as a business. Do you have plans to list Armando? If so, where would you think about listing? And if you're not looking at the public markets, are you looking at private markets, private capital, that cash injection, and what do you use that funds for?
Yeah, look, it feels good to be private. It's nice to have good investors that are backing you, and it gives us a lot of time for innovation and just thinking things through. So we're going to be private for a little while, but who knows? You know, whatever opportunity arises, we're always open. You know,
is that because the sector thinks that public markets just don't value the sector properly? We heard that from a guest yesterday.
Yeah, and again, you need to prove out the use cases, I think, and it's better to just really demonstrate in our current phase that we can solve all these problems we're identifying. So once we're there and things feel more comfortable and the markets are not as volatile, then that could be an interesting opportunity.
Armando, thank you very much. Thanks for joining us. Armando Gonzalez, CEO of Ravenpack International. Coming up, we'll get back to the bank earnings story. Morgan Stanley shares have tumbled on slower flows and a drop in fees. We'll dig deeper into the Wall Street Giants earnings story next. This is Bloomberg.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
This is Markets Today, 53 minutes into our European trading day, and the picture pretty negative, actually, for European stocks. We're down by 1.1% on the stock 600. The US picture looking increasingly negative. S&P futures down by 0.5%, NASDAQ futures down 0.5%, and the extension of the drop that we're seeing here in Europe and the United States evident. In terms of the earnings stories, we have technology as the only sector going higher here in Europe, pushed higher by the TSMC read across, perhaps. Autos and auto parts weighed down by Renault, real estate under pressure as a result of higher yields. So a lot of negative themes in the equities market this morning. Let's talk about the banking sector, though, and what we've learned so far. Morgan Stanley shares plunging the most since June 2020 after its dealmakers posted the biggest drop in fees on Wall Street. Its wealth management unit also had the lowest inflows in more than 3 years. We're joined now by Tom Metcalf, who leads Bloomberg's EMEA Finance and Investing coverage, casting his eye across the Atlantic for us this morning. Tom, what aspects of the Morgan Stanley numbers then really weighed most on the shares, because it sold off quite convincingly?
Yeah, no, it was down something like 8%, which is a really steep drop. And you know, I think it was really these net new assets in its wealth management business. So, you know, as we know, that's the pivot Morgan Stanley's done for the past few years, proved enormously successful, very much embraced by shareholders. And I think it sort of seems to have just caught investors off guard that they were missing those estimates of bringing new money in. You've got that backdrop, you know, tough market environment, you know, people being a bit more cautious, looking to sort of, you know, max out any yields and deposits. So it's not surprising, but it is also kind of a sign like, ooh, you know, can they kind of stem that? And, you know, they've set these big, very ambitious targets to draw in, I think it's 1 trillion of new assets every 3 years or something like that. This obviously makes that harder. So I think the market's going, okay, is this sort of strategy viable?
Just 1 trillion every 3 years. Wow. Yeah, the ambition is there, isn't it? Management sounding a little bit more optimistic, though, or at least saying there are causes for optimism.
Yeah, look, there was a lot of read across to similar comments from Goldman. You know, basically Morgan Stanley CEO coming out and saying, look, we really expect the deal space, the M&A space, another key part of their revenue to sort of recover perhaps next year, some sense of normalcy returning. So that will obviously really help their capital markets business. And, you know, another important thing on the net assets, they were saying, look, we always said this would be a lumpy process. You know, you're going to have some quarters that don't do quite as, you know, it's not going to be a straight line.
Okay.
So, you know, they were definitely painting a positive picture. And it'll be very interesting, obviously, next results, Q4, you know, do they sort of reverse some of those trends we've just seen in wealth management?
Okay, that's US earnings. We get to European earnings, don't we, in force next week. And switching to that theme, I know that the Bloomberg Big Take today is all about the CEO of UBS, Sergio Ermotti, and the team in Zurich have had a sit-down conversation with him. And I wonder what stands out to you from that conversation.
Yes, well, first of all, just hearing from Sergio Ermotti himself in terms of his long-term strategy for UBS. And the thing he's, you know, targeting, we were just talking about the US, that is going to be one of the big planks as they look to merge UBS and Credit Suisse. So he was out there saying, look, I don't see my job just as making sure there's a successful integration for UBS and Credit Suisse. It's much more longer term than that. It's how do we set that legacy going forward? And a big plank of that is actually going to be the US. So saying, we see that as an opportunity.
Okay.
Morgan Stanley done so well. Can UBS do the same?
Tom, thanks so much. Bloomberg's Tom Metcalf with the latest on banks. Watching the yield story then, Tom, we are seeing the 30-year yield climb once again to a new cycle high. 5.04 is where we currently trade. Another high, the highest level since 2007.
And we're watching for the 10-year, whether it breaks about 5%, 4.96 currently. So you are seeing yield flattening across the curve. Currently 5.04 on the 30-year, 5.2 on the 2-year. And, of course, across your equities, and that is a drag, you're seeing losses here of 1% in Europe. That is it for the markets today. You can get more insights from the rest of the team, of course. Stay with us. This is Bloomberg.
York is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime, but we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or your advisor?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. And market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Diplomatic efforts intensify in efforts to prevent the Israel-Hamas from widening, while President Joe Biden signals full backing for Israel, but fails to win over Arab leaders. UK Prime Minister Rishi Sunak is the latest in a line of global leaders to arrive in Israel for talks. Britain's Foreign Secretary James Cleverly heads to Egypt. Plus, Tesla misses estimates as Elon Musk dials back growth expectations. Meanwhile, Netflix posts its best quarter for subscriber growth in years. We'll bring you, of course, some of the pre-market moves in just a moment. Now, let's take a look at the European markets map. Of course, a lot of the focus is on diplomacy in the Middle East, whether the conflict between Hamas and Israel has the potential to escalate or whether there's a ramp down from here. Certainly in terms of humanitarian aid, we remain extremely focused on what happens next. The UK, you can see the FTSE down some 1%, the CAC 40 also down 1%. The mood is a little bit of a wait and see. Some analysts saying that actually President Biden not only did not achieve what he wanted, but could have made a lot of people upset, which has tensions to escalate. Rising treasury yields and also weak earnings news sapped a lot of the appetite for some of these stocks that were being bought only yesterday. Again, traders trying to track this intensifying diplomatic push to contain the Israel-Hamas war for the moment do not know where it goes. You can see the U.S. 10-year yield 4.9663. So the UK Prime Minister Rishi Sunak is the latest world leader to arrive in Israel. Now, he's making a 2-day visit as part of a global effort to prevent the Israel-Hamas war spilling into the wider region. Well, Sunak's visit comes after the U.S. President Joe Biden signaled full backing for Israel.
We're going to make sure we have what you need to protect your people, to defend your nation. For decades, we've ensured Israel's qualitative military edge. And later this week, I'm going to ask the United States Congress for an unprecedented support package for Israel's defense.
Well, Joe Biden also tried to calm concerns about the deepening humanitarian crisis in Gaza. Let's get straight to Bloomberg's Oliver Crook, who's in Tel Aviv. So, Oliver, to what extent has the Biden visit actually made a difference?
Yeah, Francine, you make a lot of the important points here. And the thing that he's able to do from Tel Aviv, which was lend support to Israel, which is what he has been doing since the very beginning, and really every U.S. official that has come over here to Tel Aviv to speak, but also the second question of deterrence, saying that, there's a very clear and simple policy for the United States in terms of backing Israel, in terms of deterring other actors, and it's don't. And he repeated that in his speech. He repeated it 3 times. The more difficult questions, that is what remains unanswered from his visit, right? There was supposed to be a diplomatic leg of this, and then there's, of course, the critical question of aid. We are now entering the 13th day of this conflict. Aid is still sitting there, literally hundreds of tons of aid sitting on the border with Gaza and Egypt at the Rafah crossing. The conditions are not yet in place for that aid to cross over. There have been positive sounds from the Israelis, positive sounds from the Egyptians, but it has not been confirmed yet. That aid is not yet moving. And overnight, there was also a UN resolution put forward to have a sort of selective kind of ceasefire and pause in some of the hostilities, but it was vetoed by the United States because that resolution did not have a clause in it that was supportive of Israeli defense.
So, Ollie, Rishi Sunak, the UK Prime Minister, also the latest leader today to arrive. What can we expect from him?
Listen, if Biden was, there were a ton of things that Biden was unable to achieve. I suspect it's going to be the same thing for Rishi Sunak. And I think that the sort of unachieved question is a major one here, right? So there's the question of aid, which we talked about, but also diplomacy. Biden was not able to go to Jordan. He was not able to meet with the president of Egypt, Sisi. He was not able to meet with the king of Jordan, Abdullah, nor the president of the Palestinian Authority, Mahmoud Abbas. That was all on the docket and was completely reconfigured after that blast at the hospital. The one thing that I think was interesting that we took away from Biden's speech was his reference to 9/11, where he said that basically in the wake of 9/11, the U.S. sought justice and they made mistakes in doing it. And he said to the Israelis, and this is sort of a concern, a warning to the Israelis, that in trying to dismantle Hamas, which is their stated objective, they need to be very clear on what their objectives are, and they need to make sure and evaluate and question themselves as they go down that path. Are they going down the path that will actually lead to those objectives?
Oliver, thanks so much. Oliver Crook there in Tel Aviv. Of course, we'll see what the day brings in terms of diplomacy. Now, joining us for the latest on geopolitics, but also on markets, Elizabeth Braw, Senior Fellow at the American Enterprise Institute, and Maya Bandari, Global Head of Multi-Asset at BNP Paribas Asset Management. So thank you both for joining us. Elizabeth, we had a very, very tough 2 weeks, and certainly the humanitarian aid is something that a lot of people are calling for, but it seems much harder to achieve than expected even 10 days ago. What do you think President Biden achieved on his visit?
It seems that he may have achieved a bit of moderation on the Israeli side, but of course we will only know whether that's the case when he is back in Washington and this war continues. But that's really the maximum that any American president can achieve. Israel is America's strongest or closest ally in the region. America, conversely, is Israel's strongest backer. And if not even America can convince the Israeli government to proceed with caution in this war, then it seems likely that nobody can. So the next few hours are absolutely decisive, and of course we'll see more lives lost if the current course is continued.
Elizabeth, what's the potential of this conflict escalating? I know we'll talk with Maya about, of course, the price of oil, inflation, the economy. It seems very secondary to everything that we're witnessing in the Middle East. Does this escalate? Does this broaden? Or again, does it stay like this?
Well, already at the moment, there is a big risk of it escalating. We are seeing Hezbollah weighing in and Israel saying, don't you dare to join this conflict. And that's why the U.S. has 2 aircraft carriers in the region now, essentially to tell Hezbollah not to get involved. But already we are seeing various governments and indeed global markets concerned. And we should remember that if Israel decides to retaliate against Iran, which is Hamas's protective power, if Israel decides to retaliate against Iran, then Iran can decide to take revenge. And I think the most likely way in which Iran would take revenge would be to target shipping in the Strait of Hormuz, because it's something that Iran can easily do. It's not a kinetic action, it's not involving military force, it's just harassing shipping, and that would have major consequences, not just for those ships, but for global shipping and indeed the global supply of oil.
Maya, when you look at this, and again, it's extremely difficult because it's a very tense situation. President Biden's trip to Tel Aviv really signaled his full backing for Israel, but another key goal that we thought he was going to try to achieve was winning over Arab leaders. So given he hasn't achieved that, what's the potential for escalation or potentials for tensions staying and continuing?
Yeah, so Francine, I think what's happening in the Middle East is frankly an enormous humanitarian tragedy, and our hopes are that we can arrive at some sort of solution. But I'm afraid I must stop there in my comments on the unfolding crisis.
But does it actually hurt? I mean, again, we don't know the impact on inflation. We don't know the impact of oil, because if there is widening conflict, this could send, and I've seen in certain research, oil at 150. You don't actually know what the consequences for policies are.
I think it's frankly too soon. There are too many unknowns to really have any asset class, so asset market implications from this. I mean, I think we've certainly seen tensions in the Middle East oil asset markets last week and again this week. But as you alluded to, I mean, I think for us it's the humanitarian tragedy that's really front of mind at the moment.
Of course, and it is for everyone. Elizabeth, when you look at, again, what happens next, is there anyone that can try and mediate this? So is it China? Is it someone else that can try and bring the tensions a little bit lower, safeguard some of the civilians, but also make sure that this doesn't escalate into something much bigger?
There isn't really, and it's extraordinary. China is seen as the world's second most important power today. But when a crisis occurs, such as this one, or indeed other recent crises that have occurred, nobody looks to China. China just doesn't have that sort of standing and that sort of credibility. So we still look to the US to try to solve or at least soothe whatever crises occur, including this one. And traditional mediating countries like Norway, unfortunately, there's little they can achieve this time. But we should remember that now, with Biden not having been able to meet with Arab leaders, there will be a feeling in the Arab world that they are not being heard, and not just among Arab leaders, but among the public in those countries. And so that is a really volatile situation. And we should remember that the situation at home in our countries is volatile too. There are very vocal blocks of citizens supporting either Israel or the Palestinian side, and there seems to be very little in the middle. So this situation can become even tense even in our countries.
Thank you both, Maya Madnari, Elizabeth Bra. Of course, both stay with us. More on markets, more on geopolitics next, and this is Bloomberg.
Are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new Bankrate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Our studios in New York and San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. Today, the Economic Club of New York hosts a conversation between Fed Chair Jay Powell and Bloomberg Wall Street Week's David Weston. Recession risk, inflation outlook, real estate amid high rates, and more. The live interview happens today at 12 p.m. Eastern on Bloomberg. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now let's get straight back to Maya Bandari from BNP Paribas Asset Management. Maya, when you look at all of the uncertainty, that's never good for the economy. When you look at tensions across the world, it seems that geopolitics could be the main uncertainty and possibly driver for the world economy.
Yeah, I mean, I think geopolitics are certainly one of the factors that are a driver of real economies across the piece. But I think when we look actually at the U.S. As for example, or Europe, we actually judge the risks to growth, if you will, to be actually quite firmly to the downside. So I think if we look at the U.S. As an example, I mean, we know why growth has been so much stronger this year, despite that monetary tightening that has come through. It's really been down to support a fiscal policy and excess savings being spent. All of these effects, if you will, are to our minds fading, and of course the volatility that we've seen in markets, those tighter financial conditions that have resulted from the geopolitics, but also from broader market moves, if you will, accentuates the downside for us.
Maya, there's this word that scares everyone, but actually it's also quite difficult to define, like stagflation. Could we see, because of renewed concern, energy prices going higher from here, but financial conditions also starting to hurt labor markets?
Yes. So I mean, I think broadly, I mean, even before the crisis, something we had noticed was gasoline prices in the U.S. had not really moved lower to recouple with oil or to recouple with break-evens, and as we know, that's an area of particular sensitivity in the U.S. But I think, Francine, broadly, for the inflation picture in the U.S., the growth picture is more than just oil prices, as you reflected, is the labor market as well. And there, certainly on a forward-looking basis, we are seeing quite a lot of signs of cooling coming through. And, wage growth broadly at the moment is around 3.5 when you put all of the various wage data together, and that's consistent with inflation around target for the Fed. And so,
how does inflation? And I've had some conversations in Marrakesh at the IMF World Bank, and it was unclear whether we're lulled into a false sense of security because inflation comes down and then actually goes back up quite aggressively towards the end of the year. Again, if you look at the models, are we looking at this as one of the biggest concerns that could lead to a policy mistake?
Well, I mean, I think, if we did have a meaningful and sustained rise in oil prices, then yes, that would alter the dynamics. That is not what we currently expect more broadly for commodities. And so I would say that, on the fundamental side, we see downside risks to the growth outlook, and you could point to some of the geopolitical tensions at the moment adding to those downside risks. And from a valuation perspective, Francine, there are really quite meaningful dislocations, and the biggest dislocation to our mind is between bonds and equities, and a bond premia are reflecting a very different scenario to equity premia at the moment, and that's where we are deploying our risk, being long of duration and adding as yields rise.
Right. Every day we come in, we look at the 10-year Treasury yield and go, what happened? If you look at where it's now, and I think we'll have it on screen in just a second, I think it was 4.9 or close to that. I mean, 5% is like a big psychological level, right? What is that symptomatic of?
Well, I mean, I think it's symptomatic to our minds of I think what we've had for much of this year, which is enormous narrative volatility, essentially. So we've had a couple of stronger U.S. data prints. We've had the geopolitical crisis unfolding in the Middle East, and I think those two factors have combined to lead yields higher. But we don't expect it to last. And so for us, our biggest risk positions are in duration, but really in real yields. So if you will, protecting a little bit against a more inflationary outcome, to your earlier question.
And you're expecting basically this policy tightening cycle to be almost complete. Does it make a difference if there's another 25 basis points here or there? I'm thinking about the UK, where certainly markets repriced a bit of the tightening expectation yesterday.
Yeah, and yesterday on the UK was interesting because what drove the UK inflation print higher and surprise to the upside was the same factor that led to the downside surprise the previous month, which is hotels and accommodation, essentially. So in the UK, I think we're seeing the impact of tighter policy feeding through much more acutely, particularly to the housing market, for reasons certainly sitting in the UK we all know and understand. A much faster transmission, much more downside to growth. And as with the US, we think the labor market is and developments on the ground are broadly consistent with trend inflation. So the UK is perhaps an area where you could see more rate cuts than expected coming through next year. And so the focus for us at BNP Paribas is more on what happens to the trajectory of policy next year. In other words, do we get some of those cuts that have been priced out in the last few months or not? And I think the case for those cuts is perhaps stronger in the UK than it is elsewhere.
Maya, as always, thank you so much for joining us. Maya Bandari, there, head of global multi-asset at BNP Paribas Asset Management, will be, of course, looking more at some of the treasury yields and quirks. Coming up, Tesla chief executive Elon Musk is dialing back expectations for the car maker as high rates continue to bite. We'll break down the results next, and this is Bloomberg.
On the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stenivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
40s.
Could face bigger challenges.
Britain's next.
Was going to keep bringing World Cup. This is a 3.
As the economic picture does.
The OK is getting ready to make a decision. Tesla is falling in pre-market trade after posting a miss on profits, a miss on sales and margins. Now, third quarter EPS, earnings per share, came in at 66 cents below the street's estimates. The chief executive, Elon Musk, is dialing back expectations as years of rapid expansion collide with rising interest rates.
I apologize if I'm perhaps more paranoid than I should be, because that might also be the case, because I have PTSD from 2009, big time.
Now, Bloomberg's Alex Webb is here with all of the details. Alex, good morning. So you're a bit of an expert when it comes to all things technology, all things cars, and all things Elon Musk. So what stood out?
Three things. So firstly, the numbers themselves, not very good. The reasons for that are kind of well telegraphed, namely higher interest rates means that it's higher to buy vehicles on financing. That's not a problem that's unique to Tesla, but where Tesla has just massively expanded its production capacity globally, it kind of needs to fill it. Secondly, those comments we just heard from Elon Musk were pretty remarkable. It's not often, that's his characteristic of Elon, not often you hear executives make those sort of comments. Of course, 2009 was a bit different. It looked like Tesla and SpaceX might go under. Eventually, he managed to pull them both through. There is no suggestion right now that Tesla is going to go under. But the third thing were his comments around the Cybertruck, that actually he talked about the difficulty they've had in bringing it to market. He said, we dug our own grave with Cybertruck. The inference of that is a little bit tricky for investors because there has been some criticism of Tesla being slow to refresh its model lineup. Now, if it has trouble doing that, that also isn't terribly good news for the market.
So from driving to streaming, Netflix is actually doing really well. They're seeing an upside and they're hiking prices.
Yeah, so what we've seen with Netflix is they've really tried to crack down on people sharing their accounts while not paying extra. So sort of thing where you might share your password with your parents who live 100 miles away, for argument's sake. That is something that Tesla is making a lot harder. You have to... Netflix is making...
You also can share Tesla.
I can share, but I'm not sure I can send it self-drivingly to my parents 100 miles away. No, the Netflix password sharing, asking people to pay more, that seems to have been pretty successful so far. That gives them scope to increase the pricing on the individual accounts as well. So a certain amount of optimism coming out of those earnings.
Alex, thank you so much for a terrific briefing, as always. Alex Webb there with the very latest on Tesla and Netflix. Coming up, the UK Prime Minister Rishi Sunak arrives in Israel for talks. We examine the dynamic between Britain and the Middle East in our Bloomberg UK show. That's just ahead, and this is Bloomberg.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knights.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right, I will concede. I can see you've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew, alongside Kaylee Lines, deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
Well, good morning, everyone, and welcome to Bloomberg UK, a special focus on the biggest challenges facing the British government, the economy, financial services, and markets. I'm Francine Lacqua here in London. Now, the UK Prime Minister Rishi Sunak is the latest world leader to arrive in Israel following US President Biden and German Chancellor Olaf Scholz. He's set to hold meetings with the country's Prime Minister Benjamin Netanyahu and President Isaac Herzog. Well, Sunak's visit comes after US President Biden signaled full backing for Israel.
We're going to make sure we have what you need to protect your people, to defend your nation. For decades, we've ensured Israel's qualitative military edge. And later this week, I'm going to ask the United States Congress for an unprecedented support package for Israel's defense.
Let's now get the latest from Bloomberg's Oliver Crook in Tel Aviv. Ollie, this is just the latest diplomatic effort to try and contain the impact, of course, on the war. The United Nations Secretary General, Mr. Guterres, is also due in Egypt today. What can the UK Prime Minister actually achieve?
That's right. We also have James Cleverly, who's been bouncing around the region as well, and that follows just a week of Secretary Blinken going all around. So all of this shuttle diplomacy, but key that Biden was not able to make it to Jordan yesterday. But let's deal with Rishi Sunak in the country today. So as you say, he'll meet with leadership here, and I think that what you'll hear from Sunak is similar to what you've heard from a lot of Western leaders, with maybe a bit more nuance, with each of them contributing slightly differently. But what we heard from Biden yesterday, which is basically unflinching support for Israel, and again, this sort of deterrence factor, one that can be really summarized from the United States standpoint in a single word, which is don't. A single word that is backed by 2 aircraft carrier groups that are headed for the Eastern Mediterranean right now. And then there is this third question, and this is really where everyone wants to see progress made, and that is the question of aid. Getting aid through the southern border of Gaza, through Rafah, from Egypt into Gaza, where there are literally hundreds of tons of aid just sitting there. We've heard some positive sounds from the Israeli side, positive sounds from the Egyptian side, but today that aid still sits there, and we had a resolution overnight put forward to the UN to kind of create a sort of ceasefire or a safe zone to get that aid in. It was vetoed by the United States because that resolution did not include a part that stood for Israeli self-defense.
So, Oliver, Biden's speech was really pretty unwavering in terms of support for Israel. Does that complicate things for Rishi Sunak?
I think to a certain degree, because we hear this from the President of the United States, and really when you hear that message in Israel, it is taken obviously very positively by the people here, but within the region more broadly, it's seen as the U.S. as just a proxy for Israel. And so we have to think about what in that speech was there for the rest of the region, particularly since the diplomatic leg of that trip to Jordan was canceled. One thing that I found interesting was his reference to 9/11, where he said the United States sought justice after 9/11, but it made many mistakes. And he's cautioning Israel about how they go about dismantling Hamas, and that they need to stay clear-eyed on their objectives, and they need to also question, as they go down that path, is the path they're going down actually achieving those objectives? And I will also say the thing that he mentioned at the end of his speech is that really what he seemed to suggest was the only way you're going to get a durable political solution to this problem is with a two-state solution.
So what's next?
So we're hearing, again, we'll listen for anything that we hear from Rishi Sunak today, and we'd like to hear what his tone is, what his conversations are with the Prime Minister here in Israel, if there's any progress made there. There's also the potential for a summit in Egypt of Arab leaders. We've heard about that a little bit. It's been reported by Egyptian media. We don't have a huge amount of detail, but that would take place on Saturday. And then, of course, maybe the biggest thing we're watching for is Biden's speech tonight, planned at 8 p.m. Eastern Time, from the Oval Office. That is a space in which the president speaks really when he has something very important to convey. And we understand from Bloomberg reporting that he wants to put a $100 billion package before Congress to deal, one, with support for Israel, but also for Ukraine. And let's not forget also some of the other issues, which is the U.S. border, which are being sort of rolled up into this bill.
Ollie, thanks so much. Oliver Crook there in Tel Aviv for us now. For more on the story, let's also bring Bloomberg's EMEA News Director, Roz Matheson. Roz, we were also commenting, of course, on President Biden's visit yesterday. What are you expecting from Rishi Sunak? I don't know if there's that much influence that the European leaders can bring at this point.
Well, that has been the question. How much influence can Europe bring in this moment? That does not stopping, of course, officials from going there, including, of course, the UK Prime Minister Rishi Sunak. There's talk of the French President Emmanuel Macron. We know there are defense ministers and foreign ministers from countries, including Germany, already in the region, including in places like Egypt, Lebanon, and Jordan. And that's all about trying to make sure that this conflict doesn't spread, to talk to these leaders, to understand where they're coming from, the pressures they may be facing, these Arab leaders in some of these states, from their own people, and how, above all, they can stop this spiraling in the event that Israel does unleash a full ground war inside Gaza. The question, of course, what can these leaders do? Well, not necessarily very much. We saw the US president with his visit. All he managed to get out of that in the end really was an agreement on the way back to allow 20 trucks of aid potentially to start going through the border crossing between Egypt and Gaza. We don't know what was said behind the scenes, of course, in his meetings. But right now, what we do know is it seems like the intent of Israel, regardless of all of this, is to have some kind of ground invasion of Gaza before too long.
Roz, when you look at United Nations Secretary General, he's also due in Egypt on Thursday. Can he make a meaningful difference, maybe of dialogue?
The key thing with him really is probably the movement of humanitarian aid. Of course, we've seen that initial agreement for 20 trucks. We don't know when those trucks might start moving. The problem with that, of course, is that the conditionality is that none of those trucks can fall into the hands of Hamas, none of that aid. And how you do that when Gaza is controlled by Hamas remains to be seen. So that could be a short-lived exercise, and that means that aid will remain blocked up at that border crossing. No one, of course, is moving the other way. So the intent of the UN and others is probably to try and negotiate some sort of way to get more aid going in, potentially to allow people who are in Gaza to leave. The Egyptians don't want them coming in great number into Egypt either. So how do you secure that? These are very, very difficult and complex issues to negotiate. But at least you can see that there's lots of leaders there, lots of officials there pressing for some kind of movement. The most urgent one, of course, though, is getting that aid in.
Who can actually unite the region a little bit more? So we thought that one of the goals of President Biden was also to get Arab leaders on side. That didn't happen. Is there anyone else who could do it?
Well, of course, there is sort of some calls on countries like Russia and China to use their clout, particularly with countries like Iran, to get them to make sure they stay out of the fray. But this is a region that is riven by complexities of history, culture, religion, that go back many, many years. There's not been unity in the region for a long time. We've seen conflict erupting in different periods. But what was the intent in recent years was to knit the region together economically, very much to have Saudi Arabia and Israel particularly doing business and trade with each other. The idea is if you connect everybody enough in terms of trade, business, investment, that you prevent conflict from breaking out. Obviously, those ideas of normalization of ties, they're now just totally off the table.
Roz, the visit of Rishi Sunak to Israel, does that have any significance politically inside the UK, inside the country? I know there's a number of publications that are saying it also maybe signals a UK shift towards European mainstream politics. How do you view it?
Well, certainly every country is concerned about what's been happening with Israel and inside Gaza as well. But the UK, like many other countries around the world, does have sort of deep cultural questions around that. And we've seen those discussions going on in the UK as we've seen them in Europe. We've seen concerns around some evidence of rising anti-Semitism in places. We've seen some evidence of that. We've also seen equally concerns around our Muslim populations in parts of Europe, including in the UK, going to start to be targeted. So what you're seeing, obviously, is the UK, like other countries, trying to balance that line between expressing support for Israel in this moment in the aftermath of that attack by Hamas, but also expressing concern about the humanitarian situation inside Gaza. And so Rishi Sunak, like every other leader in Europe and elsewhere and in the US, is having to sort of walk that line. And obviously there may be some political commentary about his comments and his interactions today in Israel. That remains to be seen.
Roz, thanks so much. Roz Matheson there with the very latest, of course, on Hamas, Israel. Coming up, we talk more about the conflict and what this means for inflation. We do look at some of the main indicators that suggest that food prices have come down. Of course, a full English breakfast will focus on that as well. It looks like everything else in the shop is still very expensive, apart from certain components of food. We'll discuss what it means for the UK economy next. This is Bloomberg.
Is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime. But we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or you're advising?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
For news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Economics, finance, politics. This is Bloomberg UK. I'm Francine Lacqua here in London. Now, the latest economic data from the UK this week shows that inflation remains sticky. So what would another economic shock, potentially triggered by tensions in the Middle East, actually mean for the country? Well, joining us now is Nina Scaro, Chief Executive Officer for the Center of Economics and Business Research, and Bloomberg economist Anna Andrade. Thank you both for joining us. Nina, when you look at, again, the complexity of inflation, the complexity of how we measure it, the fact that we had labor market pressures, but that inflation actually could come down as soon as well, could cut down less than expected. What does this renewed geopolitical concern mean?
It's definitely a risk in the coming months. It's just another complexity for the Bank of England and the MPC to keep in mind as they go into their next meeting. There's been a lot of noise. So we've had the inflation data. We were meant to have the labor market data. Now, into that already complex picture, we have the added question marks around the quality, the reliability of the labor market data, given that a part of it, the publication had to be delayed by a week. So it's really a mixed bag. And now on top of that, there is definitely risks to inflation ticking up again if energy prices go up. But what is relatively certain is that probably October will see that downtick, which still makes me think we will see a hold from the Bank of England.
Yeah, and actually, if you look at market pricing, so Nina's expecting a hold from the Bank of England. It's kind of jumping around quite a lot. I think if you look at certainly the G7 countries, it's one of the central bank sets where expectations are more uncertain than others. What's your take, Anna, on what happens next for the Bank of England?
Well, hi, good morning. We think that the Bank of England will hold at the next meeting. It has so far, the data has so far, I think, played in its favor. It's true that you had inflation kind of sticking at 6.7%. We got that yesterday. But within that reading, we also saw that the rise in services inflation was driven by volatile components that the BOE was actually expecting. So, the CPI data maybe, wasn't in line with what we expected, economists, but overall, it's not a reading that will lead the committee to panic. And then if you look at the other flow of data, so you had GDP that is on track to come below the BOE's forecast. You had the first clear signs that wage pressures are easing, and together with the CPI inflation, and we know that the BOE is more concerned about the impact on the economy and about the impact of its policies. We actually think that there won't be really a case to hike at the next meeting.
Nina, when you look at actually, the UK inflation staying higher than expected after, oil prices have jumped. And it's interesting that both you and Anna actually don't expect a big change or any change at the next meeting. What does a policy mistake look like?
It'll probably still take us a few months, if not longer, to know that in hindsight that was a mistake. But that is probably some of the thinking that is now leading the MPC. They're probably thinking to themselves, it's a difficult decision to make, but holding and then starting to hike again would be better than hiking now and then having to cut in not too long. So they're probably saying, let's see, we're still seeing the housing market impacts. We're still seeing the hikes that have already happened trickle into the economic impact. So let's hold, let's see. And if it turns out to be a mistake, it could be a lesser mistake than over hiking and then cutting.
Yeah, and I do agree with that. First of all, I'm looking at money market wagers. And again, further rate hikes held broadly steady because they're placing a 30% chance on a quarter-point increase next month and more than a 60% probability of such a move by early next year. Anna, is it all actually about credibility, that what they don't want to do, whatever happens, is then have to do a 180 turn?
Well, I think we still need to see what the data looks like. I think the BOE, we're at this stage where we're getting very positive news on the inflation. It's on a clear downward trend. We're also seeing signs that the economy is weakening. So this is progress for the BOE. It's reason to keep rates on hold. Now, if it's reason, I don't think it's enough reason for them to change their message of higher for longer, just because the BOE's goal is to get to 2%. And we're not even close in terms of inflation of getting there. So I think the BOE will have to kind of, it will have to strike a very hard balance between, getting inflation to converge to the 2% target while the economy is weakening. So I think that will be the challenge, for next year for the BOE, because we're already seeing that's happening. But, we only expect inflation to really hit 2% in early 2025. So the BOE will just have to, hold for longer.
Nina, overall, does the UK actually just have a stronger labor market that's more difficult to be hurt, like we've seen in the US, because of the dynamics of the UK?
The labor market has proven surprisingly resilient. Now the Bank of England officials have actually in recent days been very keen to point out that they think some of the very high readings in terms of wage rises are to call them an outliner and to say, the information coming out of the labor force survey isn't really supported by some other trackers of what's happening in the labor market. But it is definitely true that the UK has, especially London, has a labor market that is very dependent on foreign labor, and that has definitely dried up, partially because of Brexit, but really more during the pandemic. A lot of people left, they haven't come back. So there are those dynamics that the UK uniquely is seeing that I do think are keeping the labor market unusually strong, whilst other parts of the economy weaken more substantially.
And how much actually of inflation are we importing from China and the U.S.? The U.S. is still very strong, and China seems to be reopening with consumer demand not only holding up, but actually accelerating.
Yeah, I mean, I think how to look at inflation right now is that you have, the risk of higher oil prices. But what it's really dominating, and we've seen this over the past couple of releases, is that core goods, there's been a lot of progress in core goods disinflation and also in food. So those kind of external pressures that, drove a lot of and explain a lot of the inflation, maybe in, 2021, 2022, they're now clearly fading. I think the key thing to look at is services. And services inflation is still very high, but we also need to see that, wage growth is easing. And going back to the point about the labor market, actually the UK, compared to the euro area or the US, is the only economy that's really showing signs of a sustained increase in the unemployment rate. So if it's right that the labor market is cooling, wages are easing, and then that should then, translate to services. And services is really what the BOE is looking at.
How much do you think, Nina, we're importing inflation from elsewhere, that things are actually, beyond the control of the Bank of England and the government?
Some elements of it will be beyond their control. On the other hand, I mean, you could say that then following that argument that, if things there slow down, then that would put less pressure on the Bank of England. But I think in the immediate future, the Bank of England will maybe have, to say a relatively easy months. There's probably going to be some good news on inflation in the coming months. But then getting that inflation, if we still see it at the end of this year, we're expecting to still see it at around 4.6%. That's double target. And then the hard part will have bringing it from that level down back to target. And I still think that'll be a multi-year journey, so to speak.
Nina, very quickly, I know this straddles a little bit of politics, but actually, if there were a price of oil going significantly higher, can the UK government support families that need it most? Or is there just a huge deficit problem?
Well, I think, if it comes to that, they will probably need to find the resources to do so. I mean, the fiscal situation wasn't great when the Russia-Ukraine conflict started, and there was still a definite need to support families that needed help with their bills. So I think, and especially given that we're probably heading into an election year, the government might not have too much choice, even though it will mean some difficult fiscal decisions.
Nina and Anna, thank you both so much for joining us. Nina Skero, the Chief Executive Officer of the Center for Economics and Business Research, and Bloomberg economist Anna Andrade. Coming up, back at the helm, London has recaptured its crown as Europe's largest stock market from Paris. So what's driving up the FTSE? We'll discuss that next. And this is Bloomberg.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays. studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
So London has recaptured its crown as Europe's largest stock market from Paris. Surging crude oil are boosting stocks like Shell and BP alike, pushing the FTSE 100 higher. Now, Bloomberg's Joe Easton has worked on the story. So, Joe, first of all, London reclaiming the top spot. That's good news.
So, good news. Kind of good news for me because I don't have to check the data every day anymore to watch it, wait for it to take over.
I'm sure you do, actually, in case it goes back down.
Yeah, exactly. So as you mentioned, the oil price coming up has been beneficial for companies like Shell, BP, and the pound weakening. Obviously, you were talking about inflation in the earlier segment there. Although the data yesterday was a bit hotter than expected, it is coming down, so the pound's weakened, helping the exporters. And also there's the French angle with LVMH, Kering, all of those stocks declining because of the worries about aspirational buyers, so it's benefited London.
Does this actually matter? So we had a whole podcast actually with Julie Hoggett of the LSE, and she really pushed back and says, look, the negative narrative about the LSE or the FTSE or the UK is just not helpful for anyone. But do people say, oh, it's a bigger market cap, I'm going to list in London? Rather, does it actually drive business?
Well, we've obviously lost a few big listings. Obviously, ARM went to New York, potentially not that surprising given it's a tech company. So the Nasdaq's obviously attractive for them. The other thing to note is that this number that we track is only primary listings. So it's companies, their first listing. Companies also have secondary listings. And when you take into account the secondary listings, London is much, much bigger than Paris still, by far bigger. And I think that's what the LSE boss was alluding to in your podcast.
So overall, what could potentially derail, I guess, this outperformance by the FTSE?
So if the global economy goes into a recession, then you would expect even the companies on the FTSE 100, like the safe stocks like Reckitt or the drug companies, even them will see earnings decline on the margin. Also, the oil price potentially no longer boosting those stocks as they are at a very high level now.
Okay, Joe, thank you so much. Joe Easton there with the very latest on the FTSE. Now, be sure to subscribe to Bloomberg's In the City podcast that I host alongside David Merritt and Allegra Stratton on Apple Podcasts, Spotify, or wherever you get your podcasts. New episodes drop every Thursday.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others.
Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television. Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Young adults are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Good morning from our world headquarters in New York. I'm Menace Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
President Biden wraps up his trip to Tel Aviv, pledging 20 truckloads of aid to Gaza, as long as none is diverted to Hamas. This as the UK Prime Minister, Rishi Sunak, touches down in Israel as part of a two-day regional trip.
We're not going to be sending any humanitarian aid to Hamas if they're going to come be confiscated. That's the commitment that I've made.
It's a tale of two earnings. Netflix gets a boost after reporting its best subscriber growth in years, while Tesla misses the street's estimates amid low expectations. And markets await Chair Powell's remarks as 10-year Treasury yields near 5%. Chinese investors offload the most U.S. securities in 4 years amid a weakening yuan. A very good morning to you. There is no proceed carefully. There's no waiting and seeing by the bond market. They're not hanging around. You're seeing yields rise this morning. We're going to kiss that 5%. There's one thing about markets. They like to test psychological benchmarks. Take the 10s to 5 and see what flies. Also, the biggest asset managers out there have been slashing their long positions. Net longs have dropped the most since 2016. So the bulls of the asset managers are simply not believing that these yields have topped out. You're looking at China selling the most amount of bonds for 5 months in a row. We'll come back to that in a moment. Crude is down this morning. What you are seeing there is, of course, a ramp by 2% yesterday. But the news that the president, you've just seen him there now, has moved to remove some of the embargo from Venezuela will add maybe 200,000 barrels a day or a 25% kicker up in Venezuelan production. I thought we'd give you a little bit of gold. It's at an 11-week high. It is up 6% since the Hamas-Israel attack.
Menace, The 5%, nearing 5%, you say we're going to kiss it. Stocks do not like this. I mean, you're not being paid to take risk right now. Your earnings yield on the S&P, 4.5%. I can go get 5.2% by buying the front end of the curve. You're seeing then stocks crash for a second day under that pressure. We're down more than 1 1/3% yesterday. S&P futures off by 1/3%. Same goes for NASDAQ. The elation of Netflix strong earnings sending us up nearly 14% in the pre-market. We're still weighed down by Tesla, though, down by about 5%. So it's that push and pull resulting in a negative index. European stocks also have earnings to contend with, some poor earnings from the likes of Roche, Nokia too. So those are down by nearly 1%. But Manus, you mentioned that China flow out of bonds. I should mention it's not just bonds, it is stocks too. China sold a record amount of stocks, $5.1 billion in the month of August. That, again, is a record. So you see this overall picture of U.S. assets, Manus. I got the chart here in front of me, lowest in 4 years.
Well, the velocity of that selling across the whole asset spectrum from China, many would say, is possibly to help them defend the yuan, but it comes to those treasury markets that I said, they're not waiting around. I mean, there's just nobody waiting around in these bond markets. There's no clearing price. The 20-year auction went quite nicely last night, but if you look at what's happening from China in the bonds and that chart behind you, for the 5th month in a row, they've been selling bonds. $16.4 billion is what they sold in August. Danny, that's now the lowest holding of treasuries since 2009. De-dollarization, I think, could be the line that other people will speculate. But let's reset. UK Prime Minister Rishi Sunak is the latest world leader to arrive in Israel. The UN Secretary General, Antonio Guterres, is due to Egypt later today. The latest diplomatic effort comes as the US President Biden signaled a full backing for Israel.
If Hamas confiscates it or doesn't let it get through or just confiscates it, then it's going to end, because we're not going to be sending any humanitarian aid to Hamas if they're going to come be confiscated. That's the commitment that I've made. And so the bottom line is that El-Sisi deserves some real credit, because he was very accommodating.
We're live to Tel Aviv with Oliver Crook. He is on the ground. Oliver, you know, that was Biden. They were delayed getting off the ground. Biden did a very impromptu commentary with the press. What do you think he achieved in those 7.5 hours on the ground in Israel?
Manus, he came into an extremely difficult position, and then overnight before he arrived, that blast at the hospital made it all the more complicated, which meant he also cut off the second leg of that journey, which was supposed to be in Jordan. So what did he achieve? He achieved to convey his message of political support for Israel, and again teased a financial component to that he's going to put to Congress, we understand, later this week. There is the second aspect of this, which is deterrence, and the U.S. position on this has been clear and has been succinct. It has been a one-word policy. It's don't. And it's one word that is backed by 2 aircraft carrier groups in the Eastern Mediterranean and 2,000 U.S. soldiers on high alert. On the main question, though, on making progress on something meaningful like aid, we have heard positive noises from the Israelis, from Biden, from the Egyptians, but the aid is still not crossing the southern border of Gaza from Rafah in Egypt into Gaza. That is still not moving today, and this is really demonstrates the limits that you have for a president who was only in Tel Aviv, was not able to go to Jordan to talk to Arab leaders.
Well, on that point, Oliver, what did he have to offer the Palestinians and Arab leaders? And what more can we expect?
So again, what was lacking on this was that other side of it, the diplomacy side of it, right? And that dialogue that he wanted to open with Arab leaders. What he did say in his speech, and it was interesting to listen to this, was he emphasized the point, which I think has been reiterated across the board to Israel and to Israelis, that Palestinians are not Hamas. And he invoked 9/11. He talked about the rage that happened after 9/11 and how the United States sought to get justice after that, but that the U.S. made a number of mistakes. And he says that in going after Hamas and dismantling Hamas, as is Israel's goal, they need to be very clear-eyed about what the objectives are, and they need to constantly reevaluate if the path that they're on is actually achieving those objectives. And he also mentioned at the end, in terms of durable solutions, a 2-state solution. And in terms of the diplomatics of this, we are expecting there to be a summit in Egypt on October 21st. That is this Saturday, of Arab leaders. And there, again, another point that he made was the normalization in the region from other leaders with Israel, which was basically broken asunder last Saturday in the attacks from Hamas.
Oliver, thanks for keeping us up to date on all of this. That is Bloomberg's Oliver Crook. All right, let's get you to some of our other top stories this morning and see what's trending on the terminal. OpenAI, is said to be in talks to sell existing employee shares at an $86 billion valuation. At that valuation, the AI firm behind ChatGPT would become one of the world's most valuable, closely held companies, behind Elon Musk's SpaceX, TikTok, parent ByteDance.
The U.S. Congressional Committee is targeting Sequoia Capital after starting investigations into several other venture capital firms for their investment in Chinese technology companies.
And meanwhile, Taiwan Semiconductor Manufacturing Co., the full name, projected revenue ahead of estimates and predicted the worst could soon be over for the chip industry. It bolsters a growing view that tech demand could recover from its post-COVID funk going into 2024. Look, there is a whole lot of tech news to cover ground on. So you have those, and then we also had Netflix earnings yesterday. It's raising prices for some customers after posting its best quarter for subscriber growth in years. It's a sign of management's confidence in the future, even as rival streaming services lose money. Joining us is Bloomberg's Alex Webb. Alex, I gotta be honest, I admitted on the show yesterday that I'm a password sharer. Manus shares his, I take my parents, to which my husband yelled at me saying that Netflix is now gonna come after us after that. What did we learn? How many people don't do the thing anymore that I do and now have their own Netflix?
Well, the numbers have been pretty good on that front. Netflix has been cracking down on it. They have shown positive momentum in that sense. I don't know whether, Reed Hastings watches the show. Presumably he does. It's pretty early on the West Coast.
Fair enough. He should if he doesn't.
Yeah, maybe he can watch it on catch-up. Yeah, look, that has been something that has given the momentum and it's given investors optimism that they're able to do it. The thing that is really interesting, though, if you look at the way they manage their growth, right? You can either add more subscribers or you can increase prices. They are growing subscribers again, which is good news. The market, they outperformed the number of subscribers they were expecting to add in this past quarter. The coming quarter, they're expected to add another 8 million. That's what investors expect. The overall subscriber base is in the order of 250 million. So if you're increasing prices by $2 in your key markets, such as the UK, such as the US, such as France, it's a little bit of maths there, but actually that's about 10% to 20%, depending on which price point you're looking at, increase. They are not adding 10 to 20% more subscribers in those markets. So you can see why they're actually leaning more towards price increases than they are towards subscriber increases, because that's where the greater opportunity lies right now.
So just two things on loyalty, Alex and Danny. One, Danny, when they come knocking on the door and they say, come and bail Danny out, I won't be there. And two, I'll just stand behind you while they take you away for code share. Oh, sorry, for password sharing. It's called loyalty. And put yourself first.
But Danny, I've got your back. I've got your back, Danny. Even if Manus doesn't.
At least Alex has my back. Oh, Manus, leaving me out to dry. It's fine.
I'm just honest. The other thing is this. By the way, it just shows you how immune we are to these kind of products. You take it from me for $2 up to $3. Do you look at your bank statement? It shows you the command they have over pricing. So they're ramping up the prices, but then if I swing to the other side, you got Tesla, and here's the thing. It looks as if, he was full of doom and gloom on this news call, but the numbers and the rhetoric are slightly disconnected in a way.
Well, no, I mean, the numbers have been a little bit disappointing. They didn't meet, they fell short of expectations. I don't think expectations are as high as they have been in the past, because, of course, we know that car sales are impacted by interest rates. Loads of people buy their cars using financing. So if that financing is getting more expensive, it becomes harder to buy a car. And particularly when you look at what's happening with Tesla right now, namely that they have massively expanded production capacity with new facilities in China, Germany, and Texas. They have not yet filled all of that capacity, so they've been having to discount quite substantially. We've therefore seen a meaningful erosion of the gross margin. That has also come down below what analysts were expecting. And then the mood music coming out of Elon Musk itself, it isn't too cheery. So it doesn't sound great for Tesla investors. Nonetheless, stock's down 5% in the pre-market. Could be a lot worse.
Yeah.
the challenge is what happens in the months to come.
Yeah, and Alex, just quickly before we let you go, we also had Disney putting out some of their ESPN profit. Is this basically just to show it off? I mean, I don't know if show it off is the right word because it wasn't the best, but to get someone to buy this thing?
Well, yeah, polishing it up and saying, hey, look at this cool new thing we have in our, well, not new thing, old thing we have in our window. Look, for a long time, there was an expectation that Disney would never sell ESPN because it's so cash generative, even if it's a declining business. Sometimes, though, a declining business that is still throwing off a lot of cash can be appealing to people, not least perhaps private equity firms. They've talked about strategic partners. You know, they're putting it in the shop window. It has a very healthy level of profitability, decline of about 1% in revenue in the most recent quarter. So not brilliant news, but it's polishing up for prospective buyers.
Oh, Alex, you held yourself back there. Polishing up is a frame that's colloquially used for a number of things that you want to put on offer to a market. But I'll leave you with that thought because we'll see you a little bit later on. That's Alex Webb covering all things tech. We have a Bloomberg poll, which is certainly worth mentioning, Danny. This is Bloomberg News and Morning Consult. This is in their swing state poll. And what we've got is Trump leads Biden 47 to 43% in the swing state poll. The reason, or one of the underlying issues for voters, Danny, in 7 states is trusting Trump more on the economy is what the poll shows, perhaps over Bidenomics. We'll return to that, perhaps in touch on that with our guests coming up on the show, because we're going to talk about the dollar. The Yankee, Sonia Martin, head of FX and monetary policy at DZ Bank, joins Danny and I next. And we speak to Tom Narayan, RBC Capital Markets, to discuss Tesla earnings right here on Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of 2 different staffing needs, right?
Yes.
And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
I'll be looking carefully at the data to see whether the real side of the economy begins to cool off or whether prices, the nominal side of the economy, heat up. As of today, it is too soon to tell. Consequently, I believe we can wait, watch, and see how the economy evolves before making definitive moves on the path of the policy rate.
That was the Federal Reserve Governor Christopher Waller there on wait-and-see mode. Sonia Martin is the head of FX and monetary policy and research for DZ Bank. The dollar's not exactly, I mean, if I look at the markets this morning, yields are not in a wait-and-see mode. They're not hanging around. The dollar still remains, for many, king dollar. In that wait-and-see rhetoric, does the dollar prevaricate or move higher? Good morning, Sonia.
Good morning. Yeah, it is interesting to see how bullish people have become on the dollar. If you look at recent commentaries, we've seen first parity, euro-dollar parity calls out there. And when you look at the broader picture, you see that the dollar has performed really very much across the board. So it's not just against, an economically vulnerable euro. It's really broad dollar strength. I think it mainly has to do with the whole U.S. economic optimism. I actually don't think it's that much of a safe haven argument at this point. I think mainly the dollar really benefits from the view, increasingly widely held, that the U.S. is going to do not even a landing. It's just going to continue to fly.
Sonia, when we've had people come on the program with Manus and me, one of the arguments for not long dollar is just positioning, that we've built up this really heavy long dollar positioning. Should we care about that in these types of moments of economic growth and geopolitical strife?
Well, when you look at euro-dollar in particular, for example, you see that we had quite a large overhang, actually, of long euro-dollar positions that has been unwound. So I do think positioning does matter. When the market is fully positioned, there is probably not that much more benefit to be had in there. And I think in many ways that is true here. People have become really optimistic on the US, and I think they're ignoring the warning signs. I mean, I know I keep repeating this mantra, but it's true that I think the U.S. economy faces some massive challenges. Maybe just at the time when people are sort of throwing the towel on the U.S. slowdown story, it might just happen. I mean, auto credits, 8%. You really look at rates on mortgages, they're sky high. I mean, this is bound to hurt. And I think this is where the big surprise is going to come from. And I think probably, in a few weeks' time or a few months' time, we're going to have a very different story that we are telling.
It's interesting in that Elon Musk talked about the PTSD that he had from 2009, and he talked about high rates and people not being able to afford to buy new cars. That's the reality of 8%. People aren't moving flats, but they're not moving flats, they're not moving houses. But here we are, rates and growth at the moment are underpinning the dollar. But then let's flip it over. You say it's going to pivot. Is that what saves the euro? It's a drop in the dollar rather than and a surety in the euro that saves us from a demise below parity.
I don't think the euro is going to save itself. I agree with you on that. I mean, the situation in Europe is pretty dire. It will improve, but it's not going to be some sort of miraculous recovery. So it's going to be some moderate growth, a bit of an improvement from where we are today, but not massive. And I think it's the dollar side, which is going to be the driver of that move, because I think that, again, the discussion is going to change. It's interesting how people are so focused on the Fed, higher for longer. We're not really talking about the Fed cuts that are going to come next year anymore, but that discussion is going to change. And I always say, just remember that in the spring of this year, everyone was totally convinced that the Fed would be cutting aggressively this autumn right now. So, I mean, we have seen some massive volatility, not just in the market, but also in the way that, people predict where things are going to go.
Yeah.
It's been, 3 years of narratives constantly challenged. Sonia, one of the narratives had been an S&B that was on hold. It unexpectedly left policy rates unchanged. Again, back to the positioning question, we had this huge buildup of shorts. How much of the rally in the Swiss franc, based on its haven status, again, is just that, is pressure from the shorts meeting haven versus some sort of sustainable strength coming from the Swiss franc?
I think it has been a combination of these factors, as you just mentioned, positioning, some safe haven. But I mean, when you look at the broader picture and you look at what's happening elsewhere, I mean, I don't necessarily feel that we had a massive safe haven flow at this point. I think, it always sounds a bit awful to say this, but the reality is that as far as financial markets are concerned, the situation in the Middle East right now is a major risk, but it's very much a risk. I think people aren't, necessarily pricing in a massive impact on the global economy or in inflation. That would change, obviously, the minute we get a sort of more persistent rise in the oil price and if the conflict widens and other countries get involved. And then we're going to see a massive safe haven if this happens. But I think right now we're not there yet.
Okay. Sonia, really great to talk with you this morning. Sonia Martin of DZ Bank. Now, quick check on those currencies as we head to the break. King dollar, he is still there, up 0.1%, but you just heard from Sonia warning of potential growth headwinds to come. Sterling under pressure this morning, facing a big options pressure after we had that stronger inflation report earlier in the week. Dollar yen just under 150. This is Bloomberg.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Bloomberg Brief. I'm Manus Craney in New York, Danny Berger in London. The bond markets are definitely in a tetchy mood, Danny, right the way across. 5 bips higher for the US. The Chinese are selling bonds like Billio, down for the 5th month in a row. They've been selling bonds. 16 billion is what they sold in August. There is no patience. There is no proceeding carefully in this bond market. UK gilts also pop a little bit higher by 4 bips. And the Aussies, well, of course, they're not to be outdone. Actually, the Kiwis, Danny, let me just put this to you. Apparently, it was technical difficulties. They had to cancel their auction. So these bond markets, they are not in a wait-and-see mood, are they? Good morning.
Good morning, Manus. And I can't help but think, if yields are going to continue to trot higher, how can equities stay afloat during this? I said this stat at the top of the show. Earnings yield on equities, 4.7%. Front end of the curve, we've been talking about it, 5.2. Everybody wants to flow into cash. You can see why. As author says, there is a Tina. There is an alternative now.
Don't forget, there's unspent money in the pockets of the stimulus checks. I think Citi have a number out there. There's still $1 trillion. Look, coming up, we're going to talk about the big beast of EV, Tesla, with RBC Capital Markets on Bloomberg. Good morning.
venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to Bloomberg Brief. I'm Menace Granny in New York.
And I'm Danny Berger in London. Here's what you need to know. President Biden wraps up his trip to Tel Aviv, pledging 20 truckloads of aid to Gaza, as long as none of it is diverted to Hamas. UK Prime Minister Rishi Sunak touches down in Israel as part of a two-day trip. It's a tale of two earnings. Netflix gets a boost after reporting its best subscriber gain in years. Tesla misses street estimates amid low expectations. And markets await Chair Powell's remarks as 10-year Treasury yields near 5%. Chinese investors, they offload the most U.S. securities in 4 years amid weakening yuan. I can't get my numbers straight, but this is one number I do have in my mind, Manis. $5 billion, that's how much Chinese investors, the Chinese government rather, sold of U.S. stocks. That is the most on record. It's not just that weighing on equities, it's higher yields and it's weak earnings from the like of Tesla and European companies like Roche. So both S&P and NASDAQ futures are down at least 0.25% for the S&P. Pre-market, Tesla is down some 5%, Netflix up some 14%, while European equities, Manis, again, I mentioned the weak earnings there, those are down by about 0.8%.
Well, Danny, the clock will strike 12 in New York, and we will hear what Powell has got to say. But these bond markets are not hanging around. They are not in wait-and-see mode. They're not in the mood to proceed with caution. Yields rise this morning on the 10-year paper. That is up for the fourth day in a row. And the hurdle, we are trying to find a clearing rate in these bond markets about where the asset managers will step in and buy them. They are cutting. They've slashed their long positions, but to the lowest level over the past couple of months. So the asset managers are not in there. They are not convinced it's time to go long duration. The Chinese are selling for the 5th month in a row, and their holding of bonds is at the lowest since 2009. Crude is down because Joe Biden not just engineering aid to Gaza, but also stepping back on the restrictions with Venezuela. It looks like some of those sanctions will be eased. You can see 200,000 barrels of extra oil coming out, 25% uplift from Venezuela. That's what's taking your oil market, the heat out of the oil market, ever so slightly this morning. But if you are looking for a hedge, whether it's Swiss franc or whether it's yen, but also you've got gold at an 11-week high. It's now up 6% since we saw the very start of the Hamas-Israel conflict. Danny, good morning.
Good morning, Manis. And amid all of that, there has been a dollar bid, but it was interesting listening to Sonia Martin over at DZ Bank, basically saying, look, it's not really the haven, it's the strong U.S. economic data. And on that point, she's not convinced it will hang around.
No, she's not at all convinced on that. She said, you know, it's ironic how sort of 6 months ago was the death of the dollar was called. We're far from that. We're up 6% since the start of the summer. And what you've got here is a furious vortex higher in yields, and growth is the underpinning of that dollar bid. Danny.
Yep. All right. Well, let's move to tech, because the startup menace behind ChatGPT, OpenAI, it's in talks to sell existing employee shares at an $86 billion valuation. That is a nice chunk of change, and it's according to people familiar with the matter. For more, Bloomberg's Alex Webb joins us. Alex, I know there have been rumblings of this. We had a range before, but $86 billion, I mean, that is a hefty valuation for OpenAI.
Yeah, particularly given what we know about the earnings, which are that it has sort of, or in August at least, had trailing 12-month, or is on track to generate $1 billion in annual revenue. So it's trading, it's not trading, but it'd be valued at 86 times its historic revenue, which is meaningful even for hyper-growth tech companies.
And in terms of the investigation, Alex, we understand that the US are investigating Sequoia and what their involvement with China is. What can you tell us about that story?
Yeah, so it's a congressional committee which is asking questions of Sequoia Capital. It's one of the, you know, most storied venture capital firms in Silicon Valley has backed some of the biggest tech companies that we know today, going back best part of 50 years. It is breaking its business up into three parts: the US part, the China part, and the India, Eastern Asian division. The thing that's really at the focus of the committee's attention is this China business, how it's directing capital into China, also what sort of expertise it might be lending these Chinese companies. Is it affecting some sort of knowledge transfer into China? There's a huge amount of attention on this issue as a whole. Of course, Sequoia Capital will deny that this is the case, but that is what is the focus of this congressional questioning.
Just to put a bow on all this, and other Asia tech, we had TSMC earnings, so they cut their full-year CapEx, they miss estimates, but also see healthier growth in 2024. What does this market care most about?
As ever, it's the forecast, it's the outlook. There's been a huge amount of skittishness in the semiconductor industry. We saw ASML, which is usually the leading bellwether on semiconductor demand, because of course they make the machines that make the semiconductors that will be in the market in 2, maybe even 3 years' time. They've seen a massive slowdown of orders everywhere apart from, of course, China. Right. TSMC is their biggest customer. They are saying that there will be a rebound in chip demand. They're hopeful for a rebound in chip demand in 2024. Maybe they kind of have to say that, but equally the numbers did beat expectations. So there is a glimmer of hope in what has recently been a slightly maligned chip industry.
Well, certainly it's been a tough run, and as people debate where the world goes for 2024, along with rates, is the big challenge to a lot of the growth stocks. Alex, thank you very much. Alex Webb there with the very latest on all things tech. Let's focus in a little bit more on Tesla. Disappointing in terms of the numbers. We brought you that earlier. It was a miss on profit and sales. The CEO, Elon Musk, dialing back the expectations as years of rapid expansion collide with this rising interest rate market.
I apologize if I'm perhaps more paranoid than I should be, because that might also be the case, because I have PTSD from 2009, big time.
And he's not the only one with PTSD from 2009. Many people have it. GM and Chrysler went bust. Remember that? Tom Narayan is RBC lead for Global Autos. He has an outperform rating on the stock. You're ever bullish, $305. Good morning. It was a miss on the numbers and a miss on sentiment. I would say it was a trifecta of doom from Tesla. Tell me the other side of the trade.
Yeah, certainly I think people were expecting them, to miss. They had some production cuts for upgrades. But I think what the investor base is really missing is this is actually a part of a giant pivot towards become a supplier to other OEMs and eventually licensing FSD. You know, initially they said they were going to have all these volumes, selling 20 million cars, these sorts of things. I think we're noticing the company changing the narrative towards maybe not making as many cars, but now pivoting towards selling charging infrastructure, power electronics, batteries, and then, yes, FSD and autonomy. That's the real moneymaker anyway. We think investors are kind of missing the forest for the trees here.
I mean, that's really interesting, Tom, because, you know, even here in the UK, if I do a road trip with an electric car, the supercharging stations are so much more efficient. And then you have the other ones where you have these long, long lines. So it's clear that there is demand for that kind of thing. But then what does Tesla look like? Take me 10 years down the road for this company. Are we talking about a completely different beast?
I think so. Absolutely. You know, it's interesting. You posited the Netflix example before, how it's trading today. If you remember, Netflix in 2011 to 2013 went through a very difficult transition and shifting from DVD rentals towards streaming. And it was painful, but then it wound up being wildly successful. I think something similar is afoot here with Tesla, from selling cars to now becoming a supplier to OEMs, which honestly is far more profitable. We just saw BMW announce yesterday they're joining Tesla's supercharger network in North America. They said previously they'd never do this. Tesla's really starting to become the place where OEMs have to go to for all of these things: batteries, power electronics, charging, and then we think ultimately FSD.
What would that do to valuation? I'm looking back here on a 5-year chart. $412 is where it is. Why not say to the market, actually, I'm going to carve out this auto production unit, and I'm going to have a I am a tech manufacturing supply chain company. With that hives off what is a car company and gives you a tech company. Does that re-engineer the value quicker to $305? Would his ego let him do that? That's the question that goes in the back of my mind.
Yeah.
Well, you kind of need the cars as a proof of concept, right, to see FSD, to see the technology firsthand. So it's really a proof of concept today. But if you look at my 305 price target, you know, only 10% of that is cars, actually. I have, you know, 70% of it is robotaxi and 20% of it is just FSD itself. So this is a completely different future for this company. You need the car as the proof of concept. As far as separating these businesses out, maybe that happens in the future. But really what they need to do is show that take rate of FSD, how profitable it could be, and then in the future, the robotaxi promise. That's ultimately what he talked a lot about in the call last night. And I think that's really ultimately going to solve this whole jigsaw puzzle.
Well, just hold that thought, because your valuation is 10% cost. I got to ask Danny Berger, would you get into a robo-taxi? Which city have you been in that you get into a robo-taxi? Because I tell you what, I've just come from Dubai. I wouldn't get into a robo-taxi in Dubai. Would you get into a robo-taxi, Danny Berger?
I would go into a robo-taxi if it's one of those things that people talked about, like you go in and it's a spa, there's a masseuse there, or a gym or something like that. One of those I would certainly do. Tom, I mean, come on, is that the future that we're talking about? Am I going to be able to, you know, get my hair done on my way to work?
Well, I don't have hair done, but you'll definitely be a living room, an office, entertainment, a bedroom.
Do you know what you're saying? Do you know what you're saying? No. Do you know what you're selling? You're selling that advert for the A380 that they put out before Emirates bought them. And there was going to be swimming pools in the sky. I mean, Emirates business class is lovely. But can I ask you, the one thing that I was fascinated about is the robot. I'm going to need one of these in later life. Now, I think this is the thing. It's going to be able to do yoga, apparently, next year, the robot. What portion of robotics, on a slightly more serious valuation note, will robotics play in this company?
I mean, today, I'm not giving any credit for it right now. I think that's a call option to the future. That's an Elon project currently, but Elon projects in the past have wound up being wildly profitable. So today, I don't include it in my evaluation, but don't underestimate the robotaxi thesis. That is a very real thing. It's 100% happening, I think. It's going to happen before you know it, too.
I've just got to build my trust
I mean, it
factor.
seems... So, Manus, would you take a yoga class from a robot if you won't get in the taxi?
Listen, I'm struggling with Pilates and yoga as it stands, so don't be worrying about the robots telling me how to find my inner chi.
I love it. I mean, it doesn't seem relaxing at all, a bot telling me to do downward dog. Anyway, Tom, I'm afraid that's all we have time for. Thank you so much for joining RBC's Tom Naranyan there. Thanks so much. All right, so we've covered some of the U.S. earnings. I want to quickly, Manus, whip through what we've seen in Europe. SAP, those shares up some 5%. They reported cloud revenue that grew 23% in the third quarter.
Yep, Nokia, 14,000 job cuts. Unfortunately, the cost of human capital is looking big there. It's going to try and shave $400 million off expenses. Danny, Nestle, Kit Kats did not deliver, did they?
6% organic revenue growth. That is the weakest in almost 3 years. My favorite of this, Manus, is they did say they were looking at products that could complement Ozempic and the weight loss drugs.
There you go, Winnie. That quick snapshot of Renault really taking a hit there, down 6%. Sales come in slightly lighter than estimate, but a brutal attack on the stock. Good morning from New York and London.
Politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew, alongside Kaylee Lines, deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
No person having received a majority of the whole number of votes cast by surname, a speaker has not been elected. Pursuant to Clause 12A of Rule 1, the chair declares the House in recess, subject to the call of the chair.
That was the interim House Speaker, Patrick McHenry. Joining us now is Kate Ackley, Bloomberg government. She's up early, tracking Jim Jordan. I mean, the numbers are getting worse for this man rather than progressing for him. Is there a path to speakership for him?
He hasn't given up yet. I think the big question for him today is he going to stay in this race? Is he going to drop out? That's, I think that's the big question. The second ballot yesterday was worse than the first the day before, so it's not looking smooth for him.
If not Jim Jordan, Kate, then who?
That's another great big question. The person you just had on screen, Patrick McHenry, congressman from North Carolina, he runs the Financial Services Committee. There are a lot of people from the House, the Senate, lobbyists, people in the banking industry who know him and like him. There are a lot of people sort of clamoring for him. I don't know if that's, a real thing that could happen, but there are other members, Republican members of Congress, who are sort of launching quiet bids, people that aren't necessarily high profile. Mike Johnson, a Republican from Louisiana, there are other names, people who are sort of, mounting quiet campaigns.
What's driving the holdouts? I mean, we've got a poll, I know, from this morning, which we'll get to at the moment, but this is incredibly important and maybe plays to some of the holdouts as well. They're in swing states, aren't they?
That's right. There are the people who are holdouts. Some of them are in battleground districts. Some of them are former veterans, former military people. So they're worried about, is the Defense Department funding at stake with a Speaker Jim Jordan? There are just a lot of things happening that are driving some of this. We've seen high-level House appropriators come out against Jim Jordan, again, worrying about government funding being at stake. And, talk about sort of high drama. Some of the lawmakers yesterday who voted against Jordan said that they have received credible threats from, they didn't say who, but they said, they're asking the Capitol Police and et cetera to investigate.
Kate, Manus mentioned this, a poll that came out of Trump leading Biden 47% to 43% in swing states. Can you just break down these results quickly here and what it means going forward?
Yeah, absolutely. I mean, these are the key battleground states, not just in the presidential race, but also some of the key Senate races. We're looking at Michigan, Arizona, Nevada, Wisconsin. These are Georgia. These are going to be key battleground states in House or Senate, and of course the presidential race. So there's a lot at stake. It's a long time away before Election Day 2024, but I think you're going to see a lot of candidates, not just top of the ticket people, but down ballot, looking at these kind of results. And you mentioned the poll. There was another thing in terms of the war in Ukraine. In these battleground states, voters said they trusted Trump more than Biden on that, and that could have repercussions for a big funding package on Capitol Hill to help fund Ukraine.
All right, Kate, thank you very much for that, for getting up early for us. Kate Ackley of Bloomberg Government. Coming up, we'll look at some of the market-moving events to watch throughout the day. But first, here's what is moving in markets. U.S. futures weaker, 43.36 on your S&P. Dollar strong, king dollar still apparent. 10-year yields up by 5 basis points, nearing that 5%, while crude tumbles nearly 2%. This is Bloomberg.
Let's go inside the boardroom. Let's suppose you win a proxy fight and/or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present them with a plan.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
Welcome back to Bloomberg Brief. I'm Danny Berger in London. Manish Cranny is in New York. Let's get you set up for your trading day with a look at what's ahead. We'll get U.S. initial jobless claims, 8:30 a.m. Eastern. That will be followed by existing home sales. Those hit at 10 a.m. Then it's a big day of Fed speak. We have Jefferson, Goolsbee, Barr, Bostic, Harker, and Logan. They are all on deck. But of course, Manis, the main event is Chair Powell. He will be speaking at 12 p.m., followed by a fireside chat with Bloomberg's David Weston. So far, what we've heard over the past 24 hours from Fed speakers is the ability to be patient. Will we hear that same wait and see from Chair Powell?
Well, that bond market is in no mood for patience, is it, Danny? It's careering, barreling towards 5% without pausing for breath. There is one CEO. He is the front cover of the Big Take, and it is, of course, Motti. He took over Credit Suisse. He reasserted his position as the UBS CEO. It's the second coming, so to speak. And of course, it's a CEO in a hurry. That's a picture of him in Davos just a couple of years ago when he was stepping down, his last interview. And then, of course, Tom Naratil, who was with us last week, who is the CFO, saying it's a Hollywood cast. This is the reincarnation of UBS Credit Suisse. And I think, Danny, this is a CEO who knows how to de-risk a bank, change an investment bank, as they've got here in the US. It's different at home in Europe. But of course, he's done this before. He has form, magnificent form. The stock is up a third since he sat in the hot seat again at UBS.
Well, we know it's like a matter of months until Netflix makes this into a movie of some sort. So,
the Hollywood cast.
Maybe, yeah, it is maybe quite literally a Hollywood cast. And look, it's not just Armati, which of course this piece focuses on. It's also Chair Colm Kelleher, who has made it no secret that he thinks the company should be valued higher, maybe as high as Morgan Stanley, where he spent a good portion of his career. They want to move into the U.S. They want to move into U.S. wealth management. But, Manis, we did get Morgan Stanley earnings yesterday. That part of the business didn't look so good. New assets were the lowest in more than 3 years for Morgan Stanley.
No, but look, there's many Europeans and Swiss have come here. I mean, Brady Dugan ran Credit Suisse for many years, the American who did more transatlantic flights than most. UBS has 2,000 wealth advisors here. Morgan Stanley has 16,000. And the cost, one of the underlying issues here for UBS in the United States of America is the cost-to-income ratio is higher here than it is in Europe. But that burning ambition, which is to be the dominant force. Deutsche Bank tried, HSBC tried. I'm not saying they failed. That's for greater minds than I. But this is Armati, and the question is, does he come to New York on a charm offensive for the institutional shareholders? Is that what Colm Kelleher brings, the super sauce to UBS? That's part of the Hollywood cast, isn't it? Irish and Swiss.
Yeah.
Perfect.
Yeah. Well, you know, as part of this, as they push into the U.S., Manis, I'm expecting you to tell me what's going on. You're going to take up that mantle. I hope you know. Look, in other earnings, shall we touch on Netflix and Tesla quickly here? Because if you look at the pre-market session for these two, you couldn't be talking by more than two different verging fortunes here. You have Netflix gaining, some 14%. Tesla, it's down nearly 5% in the pre-market.
Yeah, I mean, I think Netflix have managed to put up the prices. You didn't even notice the price going up, did you? Your purse is so full of cash and swag, you just didn't even notice that they put it up by $1. I've noticed it went from $2 to $3. You see, I'm not as immune to pricing as you, Ms. Berger. That's it for the brief. Surveillance is up next. Good morning from New York and London.
politics
We're not going to be relying upon countries whose values we don't share.
to the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lines.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue. He's no longer trying to run away from
That really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers
Right.
that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
Anytime you see rising economic and geopolitical uncertainty, that is bad for markets.
Are we going to see spillover effects in the Middle East? Are other countries going to get pulled into this? And you've seen actually markets repricing.
This whole year has been a year of a market that's been on its toes and on edge.
The S&P 500, the market is controlling its emotions.
I'm not surprised that we can get a nice rally if we maintain the status quo.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance on TV and radio, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market totally unchanged this morning. We start in the bond market, 2-year, 5-year, 10-year, 30-year. In the last 24 hours, TK, cycle highs.
Global Wall Street's focused, and more importantly, quickly, non-global Wall Street is going to get really, really focused. There has been a shift. Is it because of Israel? It could be this, that, the other thing. The fact is, statistically, we've reached a tipping point in the bond market.
Is this a substitute for further action from the Federal Reserve? I think that's the question on everyone's lips today. Bramo, Chairman Powell, just around the corner.
Yeah, he's going to be speaking today at noon, and we're looking forward to that. Yesterday, Tom Barkin basically said the problem with allowing the long end to do the work for you is it moves, and this is the problem, although right now it seems to be moving in an even more restrictive place. I'm just curious, the fact that we had risk off yesterday, and at the same time, we saw bond yields breach the highest levels going back 16, 17 years across the curve. What does that tell you about the new haven status of the U.S. Treasury market? I think that is going to be a real underlying angst for a lot of people in this market.
The communication from the Federal Reserve so far, we can wait. Governor Waller of the Federal Reserve, TK, we can wait. It looks like they're willing to wait for more data, not going into December, not going into November rather, but going into the December meeting later this year.
And the arch question is, do they look at economic data or they look at market data? I don't want to slow the show down now with a bunch of drawdown on bonds, but the fact is there are bond losses right now, absolutely critical.
Well, and this is going to be an issue going forward. At what point does it become market dysfunction? So far, it hasn't. So all systems a go. But at what point does it really cause nervousness about the realized losses, which are substantial, yet haven't necessarily been realized yet?
Chairman Powell coming up a little bit later. Look out for that. Economic Club in New York. Bramo's going to give you the time for it in just a second. Let's start with two names in the pre-market. Tesla, Netflix. Different stories. Tesla, right now, negative by 4.7%. Netflix, subscribers look good, Bramo. The stock is up by 13.6% in the pre-market.
So they're cracking down on password sharing, and people were worried that maybe there would be those that just simply canceled their subscriptions to Netflix. It turns out they didn't, and that seems to be being heralded. They're raising prices. Yeah, there's some headwinds, But the gain in those shares, after all of the other gains that we've seen this year, just shows you how much more dynamism there is left in some of these entertainment names that have gotten beaten up over the past couple of months.
Let's get to Tesla as well, because
Yes.
Elon Musk is starting to sound a little bit like Jamie Dimon talking about storms. Elon Musk had this to say: we're not going to sink, but even a great ship, Tom, in a storm has challenges.
What are you going to do with your Cybertruck on Fifth Avenue?
Gets delivered in November, can't wait.
It's coming in November.
I watched the I thought of you yesterday. I knew this would happen. The numbers dropped yesterday. I'm sitting at the Bloomberg terminal, miss, squirrel. And I knew you'd run with a squirrel.
100%.
Cybertruck gets delivered in November.
The Cybertruck is delivered. What happens when you drive into the back end of one of those things?
Got no
Is the
idea.
front end of
Imagine
your
the damage
Toyota
done.
eviscerated?
Can you imagine the damage done?
I don't get it. I looked at the FA screen, folks. I am not a pro on this. My basic take is it's an auto company, not a tech company. You know, that's my amateur take.
More on this a little bit later. Tesla in the pre-market down by about 5% on the year, soaring by something like 100%. That stock this year is doing okay, better than okay. In a broader equity market on the S&P 500, slightly softer, negative by about 0.1% on the S&P. Yields a little higher, up 4 basis points. We are on 5% watch on a 10-year, and Lisa a little bit earlier came very, very close, 495.77.
And this came even with a 30-year auction, or excuse me, a 20-year auction yesterday that wasn't terrible, so that should have been good news, and yet it wasn't. Today, as far as the economic data goes, 8:30 a.m., we get U.S. initial jobless claims. Very curious to see whether we start to see more softness in the hard data. It has flatlined. If you take a look, there was that pandemic blip, and then you've seen jobless claims come in around 200,000 week after week after week. What will it take to break the trend? Today, Fed Speak includes, before the main event, just to give you a sense, Fed Vice Chair Philip Jefferson, Chicago Fed President Austin Coolsby, Fed Vice Chair for Supervision Michael Barr, Atlanta Fed President Raphael Bostic, Philadelphia Fed President Patrick Harker, Dallas Fed President Lori Logan. The main event, of course, is Fed Chair Jay Powell at noon at the New York Economic Club in conversation with our very own David Weston. What does he signal in terms of hawkish versus dovish? A lot of people are expecting a hawkish tone to sort of counter some of the potential. I actually agree with you.
I don't think it matters. This bond market, and we are so distracted, John. I know we have to get to Oliver Crook in Tel Aviv here quickly. You know, my first question to the chairman is,
what is
Chairman Powell, yesterday on the Bloomberg terminal, a 30-year mortgage is 8.00%. What are you going to do? And then bite my lip.
Just want to finish up here. 8 p.m., President Biden is going to be talking about aid to Ukraine and Israel, and this pairs into the bond debate. He's going to probably ask for $100 billion in aid. How much does that really feed into some of the reaction that we've been seeing in the bond market?
It's getting more expensive, that's for sure. Let's start in Israel. Bloomberg's Ollie Crook in Tel Aviv. Ollie, wonderful to catch up with you, buddy, as always. The president leaving behind a tightly coiled spring. What did we achieve in the last 24 hours?
Yeah, tightly coiled spring, and I think that we achieved all that we could really hope to achieve from a president who's only going to Israel and not going to Jordan, as was the original plan, and that is the message of support to Israel, which we've heard reiterated again and again. Deterrence, American policy on this is succinct, and it's one word, it's don't. It's one word backed by 2 naval fleets and 2,000 troops on high alerts. If you're wondering how the Israelis have reacted to the visit, we got the front page of Haaretz here, where you can see Benjamin Netanyahu, Joe Biden embracing on the tarmac upon his arrival, the headline reading that his significant aid will come to Israel and that Biden backs the position that they did not bomb the hospital. What was left for the Arab world and the Palestinians is another question. That diplomacy didn't happen. And in a story where there is so much happening, so much talking, so much military activity, the headlines are still the same. You have aid stuck on the border of southern Gaza in Egypt that cannot cross over.
Oliver, when will the military act? I know it's an unfair question surrounded by secrecy, but this is like this week, momentarily in a few days, or is it out there somewhere after substantial bombing?
Listen, all we can do is read the tea leaves from these signals that we have gotten from, the U.S. officials and obviously from Israeli officials. The when is the question on everyone's mind. No one has an answer. People will speculate that while there are leaders from the West in Israel, perhaps that is not a time for them to move in. Rishi Sunak is here today and tomorrow. But again, Tom, I would also caution that there's the when, but then it's also the what, because the Israelis have also been saying don't expect necessarily a full land invasion where there's an occupation of Gaza. This could be much more tactical. This could be much more limited, but as a result, it could take a lot more time.
Ollie, you've done a tremendous job for us over the last couple of days. Looking forward to catching up with you a little bit later this morning. Ollie Crook there on the ground in Tel Aviv. Joining us now is Norman Rule, former senior US intelligence official and senior advisor at the CSIS Transnational Threats Project. Norman, if I may, I want to start with a quote from the President of the United States, Joe Biden. Here's the quote. I caution this. While you feel that rage, don't be consumed by it. After 9/11, we were enraged in the United States, and we sought justice and got justice. We also made mistakes. Norman, what do you think he's alluding to there?
Good morning. The president and a number of his advisors firmly believe that the post 9/11 years drew the United States into a dark place of extrajudicial handling of detainees. It hurt our relations with a number of countries. It drew us into a 20-year war in a variety of locations. We forgot to think about how this ends and more about how we spent more time thinking about how this continues. And he's just advising the Israelis, don't do this. Now, that's fairly easy to say, and for the Israelis, they get it, but the problem is coming forward with a campaign that achieves their strategic and tactical goals without drawing them into this conflict is a challenge. We are off the map in many ways for both parties.
Well, Norman, this comes at a time where not only are we dealing with hot wars, we're also dealing with information wars. From a messaging standpoint, is Israel losing the room as some of these headlines come forward, regardless of their veracity?
Israel has had a very difficult room in the Arab world. Arab press has stood with the Palestinians, unsurprisingly, and the narrative regarding the El Ahla hospital bombing has been consistently anti-Israeli. So there was very little hope that Israel would achieve any gains in that direction. I think part of the president's trip to Israel and his work tonight during the speech will be to shape the U.S. domestic audience, where we've seen a number of protests, to include anti-Israeli protests in the U.S. Capitol yesterday.
Norman, does the Israeli intelligence have people on the ground in Gaza? Do they have any working knowledge of the makeup, the demographic, the people that are within that 25-mile strip?
Israel has traditionally had superb coverage of the dynamic within Gaza, and the fact that overnight they have eliminated the Hamas security chief demonstrates rather clearly that they're able to locate, identify, and neutralize officials who have a pretty strong sense of their personal security. But this is a labyrinthine, complicated area with hundreds of miles of tunnels. Very difficult to follow.
Do you presume that any military, given the geography, the makeup, the urban nature of it, is benefited by acting quickly or being patient?
Being patient. And the Israelis are undertaking an air campaign at present, which is not only eliminating Hamas senior officials, but is reducing their availability of weapons, command and control centers, shaping the battle space so when they do go in, they have a better understanding of where they must operate and areas they don't have to focus.
Norma, can you give us some sense of how we can read some of the rhetoric about whether Hezbollah is getting that much more involved and whether Israel is preparing for something more substantial in terms of attacking on the northern border?
Lebanese Hezbollah's activities in the north have been consistent and increasing modestly over the last few days. There are about 10 to 12 attacks a day. They consist of mortar fire, anti-tank missiles, and some small incursions. It's across the entire Israeli border. Israel has pulled back its population from 2 kilometers, will likely increase that to 5 kilometers. At present, the conditions with the Israel-Hamas conflict are not quite what Lebanese Hezbollah would need to ignite an entire conflict, which would significantly damage all of its political and material equities in Lebanon.
Norman, for more than a week now, there's been this sense that the full ground invasion was imminent. Over the last few days, that's kind of faded just a touch. Norman, do you get the sense that something's changed in the operational plans? You know the famous line that all plans fail on first contact, but do you sense something has changed in the last few days?
Great question. In part, this was an information operation, but the Israelis are very careful planners for military events. I don't think there was ever a likelihood there would be a knee-jerk response, and unless they had a plan in the can for an invasion, which is unlikely, it would take some time. But we shouldn't discount that a type of incursion could happen at any time. They also have been pressured by the United States and a number of European partners to be very careful of civilian casualties casualties, and that's causing them to develop a different type of approach to this target set.
Does that mean more targeted operations until we get full clarity on hostages in Gaza?
I think there's certainly going to be more targeted operations, even with a ground assault. With a ground assault, you're going to be moving people throughout Gaza to include Hamas leadership, and as they move, they become vulnerable to attack. But the hostage issue is a serious complication because it also means you don't want to attack places where hostages are located. You need to have intelligence to say, when you do attack a place, there aren't hostages there. So that does introduce some careful thinking into attack planning.
Norman, your insight's been incredibly valuable to us over the last few weeks. We appreciate it. Hope to catch up again soon. Norman Rule there on the latest on the ground in Israel. Said it to Ollie, Tom, the president leaving behind a tightly coiled spring in Israel.
Well, the coiled spring's there, and you know, I really take issue with everybody's doing a walk-by. We're doing modern, at least I'll let you decide, modern TV diplomacy. The governor of New York State is making a walk through. The Prime Minister of the United Kingdom is walking through. The President of the United States, with all the heritage of the two countries. It's a military, this is a war, and I wonder what's going to happen in the next 48 hours.
Well, and there's a real key question of how do you hold the room, not just within the Arab world, but also beyond, as you try to keep going forward in the support in Israel.
Full team coverage still ahead on this program, and coverage of this market as well. Coming up, Seema Shah of Principal Asset Management with your 10-year yield getting closer and closer to 5%. Chairman Powell coming up a little bit later this afternoon from New York. Good morning.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. Today, the Economic Club of New York hosts a conversation between Fed Chair Jay Powell and Bloomberg Wall Street Week's David Weston. Recession risk, inflation outlook, real estate amid high rates, and more. The live interview happens today at 12 p.m. Eastern on Bloomberg. Context changes everything.
I'll be looking carefully at the data to see whether the real side of the economy begins to cool off or whether prices, the nominal side of the economy, heat up. As of today, it is too soon to tell. Consequently, I believe we can wait, watch, and see how the economy evolves before making definitive moves on the path of the policy rate.
There's one line that matters there. I believe we can wait. Christopher Waller there, the Fed governor, going into the November meeting. I believe we can wait, even as the data comes in a little hotter than expected. Will we get another round of that data going into the December meeting? Big one a little bit later, noon Eastern. Chairman Powell with David Weston at the Economic Club of New York. Noon Eastern TK with the big question we're asking all morning. The moves we've seen in this bond market, are they a substitute for further action? from his central bank.
They're non-linear, and they are what we call quadratic, which means they don't go step by step like the Three Stooges, inch by inch. As they move, they become bigger, and some would suggest bigger became yesterday, John. I'm looking at the first print on the U.S. 10-year real yield, and for my editorial judgment, it is an unimaginable 2.52%. It was 3 cups of coffee ago I thought we'd never get to 2.2. We're at 2.5.
The nominal yield on a 10-year really, really close to 5%. Check out the price action now. High of the session, 497.91. Currently on the 10-year at the moment, we're at 495.56. Yields up by 4 basis points. In the past 24 hours, this morning, yesterday, we've seen cycle highs on a 2-year, 5-year, 10-year, 30-year yield. Your 30-year still above 5%. Your 2-year at 5.24, up a couple of basis points this morning. The euro trying to recover 105.46 on their currency pair. Bit of euro strength, that pair positive by 0.1%. Crude pulling back. We can talk about this a little bit more a little bit later. But 87 on WTI, we're down 1.4%. We mentioned this earlier in the week. Watch out, Venezuela. Bramo. Sanctions easing on Venezuelan crude.
And this morning saying that they're going to increase their production, softening ties at a time. The cynic will say it is a very convenient time to say things have gotten better there because it is better to get on the margins more oil production at a time of potential disruption in the Middle East.
Brent crude, a break of 90, Tom, 89.99.
Under 90, our first brief this morning of this debt market, and we are thrilled to bring you Seema Shah, Chief Global Strategist, Principal Asset Management. Seema, in the zeitgeist this morning, is something changed yesterday, maybe something changed over the last 48 hours. Is it nonlinear? Is it quadratic? Is there convexity? Did something change in the last day?
It certainly feels like there is a different level of momentum going on in the market at the moment. We do think we're getting closer to a top. Certainly, we've had a long-held view. We've discussed this many times with you. We are expecting a slowdown. It is definitely not showing any signs of coming through at this stage. I think that's what really bond yields are responding to at this point. But of course, the further that yields rise, the greater the chance that a slowdown is going to be even deeper. Now, momentum can take you pretty far, and there's a number of other factors, as you've discussed in the program many times over again. Deficit issuance, Bank of Japan. There's so many things that probably mean that the floor for bond yields is higher. But certainly we do think that as soon as you do get clear evidence of economic slowdown, and as long as we get a very clear signal from the Fed, whether it's Powell today or later on, that should really mark the peak for 10-year bond yields.
Okay, well, what I'm going to do, folks, is give you the perspective, but not all at once. We're going to drip these data points in to show the losses that are being taken. Just since early April, the 10-year yield is down in price 12 shocking %. So, Seema, your question, if you were doing the interview today and not David Weston, do you say to Chairman Powell, sir, are you even aware of the acceleration of higher yields?
Well, look, I think it's a bit unfair because actually for the Fed, just like the rest of us, we're all trying to decipher what is driving this 10-year, this move up in bond yields. Is it term premia? Is it the move up in neutral rates? And that is going to be really important for how the Fed moves on in its decision. Now, it's very difficult to figure out exactly what proportion is driven by which. So equally, I think the Federal Reserve themselves are trying to figure it out. You hear it from a number of speakers over the past couple of weeks, is that is what they're trying to figure out. And as long as they don't have an answer to that, then it probably does make sense for the Fed to stay on hold. But of course, there's so many risks on either side that each moment that we don't know is somewhat damaging to financial markets and to potentially to the economy as well.
Seema, do you consider treasuries still to be a haven asset?
Gosh, looking at the way that things are moving in the last 24 hours, I think you do have to question that, certainly. Given what's been going on from a geopolitical front and the fact that treasury yields continue to rise, and the fact that actually gold has rallied, it does set that question. But I think the thing is, at the moment, the market is so specifically focused on the strength of the economy, what the Fed is going to do, that they're almost thinking about the safe havens as other assets. Now, let's get beyond this phase of uncertainty with regards to the bond market. And yeah, I do think treasuries will return as a safe haven, as a choice. But at this point in time, there's so many different forces which are buffeting the bond space that it's difficult to really say with great conviction that today treasuries are your safe haven.
There's an irony baked into a lot of the conversations that we've been having with certain investment managers who are saying that risk assets are the new havens, that essentially corporate America and the corporations that have immunized their balance sheets are essentially in better financial shape than the U.S. government, than a lot of the sovereign governments that used to be the stalwarts. Do you believe that? Do you think that traditional risk assets, including some of the stocks that have been the highest flyers, are increasingly the haven assets of the moment?
Well, I think that's true to some extent, and you definitely do hear that from clients and the way that they're talking about it. It's not everything by any means. It's very, very specific. You know, people want the big balance sheet. They want something which they know is going to provide stability, and something specifically that they know is, you know, they have some understanding over a longer term. So, you know, they look at the short term and say, okay, this is very difficult, but at least over a longer term period, there are secular trends that we can put our trust in. So yes, from that perspective, maybe there are a few corporates who have that strength, and most importantly, will be able to withstand any further upward pressure from treasuries. But it is a very difficult environment for investors, I think, today. And actually, it just makes more sense in that case to try and look beyond, as difficult as it is, to try and look beyond the next month, 2, 3 months, and try and have a bit of a 6-month, 1-year outlook. That is very important today.
Seema, you had a tour of duty at Treasury, and you were very aware, obviously, with Principal Global, of the United Kingdom bond debacle, debt debacle, pension debacle of a number of quarters ago. Do you feel we're at a point of institutional risk where the degrees of freedom of bond managers with actuarial assumptions can't get it done, and we become unstable within our conservative institutional money?
And I'll tell you, that is a question I've been getting a lot of within the last 24 hours. As you're getting close to that 5% point, that is the main question. But I have to say, look, we are not detecting any clear signs of financial stress. These numbers are certainly, I guess, concerning. We actually think that the system can withstand rates getting to 5.5%. The most important point, of course, is how quickly they can get
That's
there.
important, Seema. You're saying the financial system can withstand a move to a 10-year U.S. 5.50%?
As long as it is backed up by strong economic growth. So again, it comes back to what is driving yields higher. If it's because the strength of the U.S. economy is that resilient and inflation is maybe a little bit contained, then yeah, I think that the system can withstand it. But I also have to clarify here as well that, look, with financial risks, it's typically not in the area that you're looking at. So it's probably not going to be from the pension system. It probably won't even be from the banking system because it has been ring-fenced by the Fed. So, you know, typically financial risks, as they arise, when they arise, it's in the place that you're not looking. So we have to be a little bit humble about this, and investors everywhere have to be saying, you know, maybe we can't see any risks today, but there has to be some kind of defense within your portfolios, potentially to kind of withstand anything that could arise as obviously we get closer and closer to that point where the frictions start to come up.
Seema, we've got to leave it there. Seema Shah there of Principal Asset Management. I know the year's been long, but did we forget that a bunch of banks failed earlier this year? Hasn't the risk materialised already? And we're talking about handling 5.5%. What happened in spring?
It was on the margins. It was specific stories. It was a liquidity issue. They've been solved by the Fed.
Did break.
Yeah.
Right, we'll continue this conversation. Equities on the S&P, totally unchanged from New York. This is Bloomberg.
for the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Our studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
The S&P 500 was up on the week. It's down on the week now. It's just about unchanged on the session. On the S&P 500 going absolutely nowhere. On the Nasdaq positive by 0.15%. We'll talk about the big move higher we're seeing in Netflix this morning in just a moment. Let's talk about the big move higher in bond yields over the last few weeks. 2-year, 10-year, 30-year. Throw in the 5-year. We're talking about cycle highs over the last 24 hours. A 10-year that gets closer and closer, Lisa, to 5%. 495.77.
And the move has been dramatic, and it has come even though there has been risk aversion. And to me, this is the key point. And we heard this just then from Seema Shah. At what point does that send the biggest message? That amid risk aversion during the conflict in the Middle East, we could see that treasuries are not a haven.
TK, you've been thinking about another aspect of this as well. The price loss that we've seen at the long end of the curve.
Yeah.
In some places, I talked about the gilt mark in the UK recently. We're talking about losses of something like 50 to 60%.
Right.
Depending on which security you look at. And a question I think we've got to ask, Tom, have we fully realized the pain associated with those losses in this bond market?
This is something third rail for me, right, John? John, I was in 3rd Avenue having fine dining at McDonald's, and a guy came up to me, and he said, thank you for mentioning what people really feel. And there is a separateness right now of institutional Frank Fabozzi bond dynamics from the real world of the pension people I mentioned with Seema and others of -10. -12, -18%.
One of our guests came on and said if she could find a 30-year treasury selling at 50 cents in the dollar, 40 cents in the dollar, she'd buy it, but you can't because they're not for sale. And this is the key point. To your point, they're not being realized. The forced sales are going to be the key question, which go to the point, when do you see big flows out of treasuries in a way that does force the hand of some investors?
I know we got to get to under surveillance, John, but what I would say is you can think as hard as you can about this. You never can see it coming. I can't tell you where the fixed income drama is going to be.
Always surprise.
Yeah.
Always a shock. Let's turn to the commodity market. Look at Brent. Look at WTI. The move in crude today. Just south of 90 on Brent today. Just about north of it at the moment. $90 and about 5 cents. We're down on the session, though, by 1.6%. We've had 3 levers to pull. The SPR. We drained that. Iran. Maybe turning a blind eye to production out of Iran. Can't do that anymore. I'm being very cynical, I know.
Yes, you are.
And then the third story, why don't we ease sanctions on Venezuelan crude? This was Javier Blas has been talking about this now for months. And Lisa, here we are.
Ding, ding, ding. We'll take that door.
Right.
For 500, Alex. This is sort of what we're seeing right now, is that they are going to relax sanctions on Venezuela. A story this morning on the Bloomberg talking about how Venezuela is poised to increase production by 25% in the very near future. So maybe they'll be even a bigger marginal player since they aren't necessarily one of the major producers out there.
That works out at about 200,000 more barrels of crude a day out of Venezuela. Under surveillance this morning, President Biden delivering an address to the nation at 8 p.m. Eastern on the Israel-Hamas war and Ukraine following his brief trip to Tel Aviv. Biden saying as many as 20 truckloads of humanitarian aid will be able to enter Gaza through neighboring Egypt, with Israel saying it will only allow the aid to enter southern Gaza if it's certain, Tom, that none will be diverted to Hamas.
I'd like to see a good article right now on the 25 kilometers north to south from Gaza, pretty much up near the north of the Gaza Strip, down to Rafah, is it, Lisa? And to see where Israel's focused. And that allows the humanitarian trucks to get in. If they're not focused within, I'll pontificate 6 kilometers of Rafah in the southern border.
The more I read about this, the less clarity I have on who's holding it up, on what the issues actually are, and how accessible the roads and the infrastructure there are to deliver aid. How do you parse out individuals in Gaza from Hamas? How do you deal with the fact of checking each truck? What is Egypt's main hang-ups? These are all uncertain things. The more I read, the more confused I get.
With tremendous difficulty and very little clarity, Bramo, to your point. Second story for you, Chinese investors selling the most US securities in 4 years in the month of August. $21 billion of sales coming to shore up the yuan as the onshore yuan fell to its lowest level against the dollar since last November. This is what Macquarie's got to say. This could be to liquidate some bond holdings to obtain US dollar cash in case it's needed later to defend the yuan via intervention operations. Mohammed Al-Arian's talked about this now for weeks. We have lost the anchors to this treasury market, the foreign buying, the BOJ, the European Central Bank. Take your pick right now, Bramo, QT, whatever it is, we've got problems.
These are data from August. It raises a question of how consistent some of those sales have been. The point being that there isn't the price-insensitive buyer, to use Dalip Singh's phrase of PGIM fixed income, that there used to be. Is this what's behind the increase in yields? If it is not changing anytime soon, and I think that is what's driving some angst and a lack of conviction around a number of bond investors.
Just a real loss of predictable sources of demand. I think Dalip's done a great job of that over the last month or so. Two names I want to talk about in the equity market, Tesla, Netflix. Elon Musk seeing a stormy outlook ahead for Tesla, rising interest rates, weakening consumer strength colliding with the company's rapid expansion. Musk saying this, we're not going to sink, but even a great ship in a storm has challenges. The company reporting third quarter profit and sales that fell below estimates. Tom, that stock is down by almost 5%.
Yeah, Graham Dodd and Cottle 101. I looked for operating leverage. The revenue story is really remarkable. I mean, what this guy's doing in terms of bringing in money is great, but it's not showing up down the income statement. He does not have operating leverage at play.
Can we check out Netflix as well?
They
Look
do
at this
have
move.
operating leverage at play.
They got a serious move in a pre-market, higher by more than 13%. Brighter forecast for Netflix. The service set to raise prices in the US, the UK, and France. Subscriber gains, Bramo, looking good. The stock outperforming this morning.
And the fact that they can raise prices and they can crack down on password sharing and still get and maintain their subscribers and still be able to deliver bigger earnings beat tells you where we are. And it raises questions on a macro level about the stickiness of inflation. I mean, if you think about the debundling, right, this idea of Netflix and Paramount and all of the other payments that you're making, we were supposed to hear that people were going to crack down on this and pull back. They didn't, and I think that's important.
Tells you a lot about the taste of consumers too, doesn't it?
Yeah.
That they're willing to watch Suits. They're willing to watch Suits. Telling me that the big blockbuster of Netflix in the last quarter was reruns of Suits.
Okay, really? You're gonna?
Okay,
I'm serious.
No, it's true. No, it's true.
It's true. Well, it's a different demographic.
Are you watching Beckham? That's what counts.
I have watched that, yeah.
What do you think?
It was quite nostalgic. Good documentary. I thought it was going to be about the both of them. It's much more about him.
Yeah.
And his football
Did
career.
he really? Was he really the one that made the football curve?
You mean, was he a great free kick taker? Yeah, sure. I think what's interesting is I think Americans think David Beckham was better at football than he actually was. And I think in Europe we were aware that he actually wasn't that good.
But he just was
to such an extent that I actually think he was underrated in Europe and perhaps overrated in America, if that makes sense.
It does make sense.
Okay.
It's all about the image, maybe, in the U.S. and maybe less about substance.
The man and how he looked.
Yeah.
Okay.
And some of the...
Amy,
maybe.
thank you so much for watching the show today. She says Suits is a great show. She thinks it's Shakespearean.
I think it's important. Look, we've got a writer's strike. We had one anyway. We've still got an actor's strike.
Yep.
See if that continues. So their blockbuster was Suits. Okay. You want to watch reruns of Suits and Meghan Markle?
Jeff Yu has not
I'll take a
watched
pass.
Suits.
I'll take a pass.
Joining us now, Jeffrey Yu, Senior Market Strategist and Beckham Analysis at BNY Mellon. We're thrilled he could join this morning. Jeff, I'm dropping in the debacle of the moment here slowly across 3 hours of surveillance. In an emerging market, the MSCI EM from the top is down 34%. Jeff Yu, to begin, how bad is it out there?
There's just very, very limited interest in moving into EM assets, full stop. We're not big fans of EM equities at this point, notwithstanding the China supposed stimulus push. We like EM bonds, but looking at our flow data, there's just very little take-up. You've got good real yields in LATAM, for example. You don't need to take that much FX risk. But again, with front-end dollar offering you 5% plus, I don't think anyone's biting the EM cake right now.
Jeff, Lisa's been asking this question all morning. Let's get into it. Where'd you hide? Do treasuries work anymore?
Well, looking at over the last 2 weeks or so, where have we seen some marginal increase due to a combination of factors? Look at the Swiss, that is moving. Look at sterling, we're finding gilt, so gilt flows are moving forward as well. And we're finding interest in JGBs, not necessarily in yen, but people don't want to reduce their exposure to Japanese assets at this point. So it feels like A, people are very, very long dollars, they don't want to add to that, but B, people are looking for safety alternatives.
Jeff, there's a question about whether we're seeing in real time a structural shift in some of the benchmark U.S. asset buyer base, whether we are seeing a fundamental withdrawal from Chinese, from Japanese investors. Do you see the evidence of that, or do you think that story has been overplayed?
We are starting to see evidence, well, I would say more evidence of that. Initially, we thought it was overplayed, looking at our flow monitors that have foreign investors being strong sellers, not in the way that people have been talking about. But now, that is them starting to show up more in data. But what are the reasons behind it? To prop up their own currencies, or do they worry about the US deficit moving up ahead? So those are two very different stories right there. But given that the market, the whole international asset base is still quite overweight dollars, that just doesn't bode well for dollar interest or US asset interest at this point. On a structural view, I'm still not so sure.
Overnight, there was a former member of the board at the Bank of Japan who came out and said that it's possible for them to abandon negative rate policies as soon as later this year. Do you think that that has basically been baked into markets already, or is that another shoe to drop when it comes to some of the flow dynamics pushing yields higher?
Sure, it's been steadily being baked into markets. As I said earlier, people don't want to be short yen anymore. So I look at our flow data for cross-border investors. There's a very small long yen position in place ready to capture that. But the other side of the coin is if more Japanese money stays in Japan, that has asset allocation implications globally, not just for treasuries. I'd worry about European and US corporate credit as well.
Jeffrey, when does the real yield impinge the system? If we look at the inflation-adjusted yield is basically the cost of capital, the lodestone, the foundation. We're sort of there, but what's your single point number where the 10-year U.S. real yield affects us all?
Well, when you actually have real yields push through, 1 percentage point, 2 percentage points, for a developed economy. I think that's where the pain really starts to come through, because then you really start to struggle to make the case for real income growth. For real income growth in the US to reach 1%, 2%, that is to be celebrated. But if that's going to be offset by the cost in servicing your debt in real terms, right, then everything negates itself. We've seen that happen in LATAM already, 4%, 5% real yields in various economies, and that's really starting to slow things. You want a lower number for developed economies, especially for the US and maybe for the Eurozone, but we are certainly heading in that direction. But then again, it's contingent on, in the US, the difference is, people's debts, especially mortgages, that's at fixed rates, whereas in the UK and some other places like Australia, Scandinavia, that's a bit more floating. So the transmission is different in different areas.
Jeff, help David Weston this morning. He's sitting down with Chairman Powell a little bit later on this afternoon. What would you ask him?
So has the market done your job for you? More and more FOMC members are sort of heading in that direction. I'd like to see a bit more conviction, because if that's the case, then you can fully price out any discount in markets relating to further rate hikes or things like that, and then it's purely a higher for longer story, and then we can look forward to the next phase of the cycle. But we need confirmation, and then where the Fed leads, the rest will follow. And I think especially emerging market central banks, they're going to be following it closely. Look at the Bank of Indonesia a few hours ago, hiked, surprising. They're still worried about the Fed moving higher, or Fed conditions weakening their own currency, and there may be a bit of a panic coming through across Asia. So that clarity is needed from the Fed.
Interesting, Jeff. Thank you, sir. Jeffrey Yu of BNY Mellon, looking ahead to that sit-down, fireside conversation, fireside chat with David Weston and Chairman Powell at the Economic Club in New York at noon Eastern Time. That's the question right there. Is this chairman really willing to outsource monetary policy to the long end of the bond market? We get an endorsement of that later.
We had a guest off camera yesterday, off microphone, say this is the day where the Fed loses the narrative. They lose the script. And these speeches, all of a sudden, we make jokes about them. You know what? They may be important.
If he doesn't, and if he comes out and he says that we're going to hike rates, do you see the long end actually come down?
He's not going to.
No, but if he actually indicates a more hawkish stance, does that actually imbue more control over the long end just because there is this feeling they're going to do more because of the economic momentum?
That is a dialogue for when the bond market didn't move. I don't think people understand the losses at this moment across portfolios. Nobody gives a damn about hawkish, dovish. They're like, what are you going to do about these yields? Silence, listen.
I love how closely you don't follow this at all.
I don't want to give my opinion. Thank you.
I know, but you will anyway.
Thank you.
Future's positive on the S&P. Bram Weezer and Madison and Wall on Netflix. Netflix up big time in early trading.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Keep getting better at monetizing that big and growing reach and engagement. So we believe we've got a long runway for growth in both kind of more membership and higher ARM over time in a more balanced way than what you saw this year, which was, again, a pretty unusual year.
Spencer Newman, the Netflix Chief Financial Officer. Netflix shares gaining in the pre-market after reporting its best subscriber growth in years. The company also announcing it's raising prices for customers in the US, UK and France. Brian Weezer and Madison and Wall writing this. Although a 15% price increase is significant, I know that it's likely the case that many, if not most, of Netflix's subscribers consume enough content to justify this cost, given the high volume of time spent, Tom, with the platform.
Yeah, we had Brian over this weekend, and he looked what was happening at the keynotes. You know, we just had the CFO there, styling from Netflix. John, am I losing it here? Do I need to get out of the suit and bow tie and get into full Patagonia?
That's the Midtown uniform.
Yeah.
And I'm against it. I can't
so
stand it. I hate
obviously.
it. I saw two chaps walk across Park Avenue yesterday in their Midtown uniform, the Patagonia vests. No.
My favorite part of this entire show is when you start, going through an issue, and all of a sudden Tom just is like, oh.
I can see him out the corner of my eye.
No, just absolutely like going ballistic.
Just keep going.
No, but the guy
plowing through.
The guy for Netflix is going full Midtown.
Full Midtown uniform.
Yeah, that's all there is to it.
Look, if your stock's up, you can get away with it. Do whatever you want. Okay, if the stock's down, put on a suit. Okay. All right.
Fair permission.
We're going to help you with your house, the streaming. John Farrow trying to cut down his cable TV bill by, 30% or something like that. Brian Weezer has been brilliant on this. Principal senior media analyst, Madison and Wall, and he's really had an arch theme for a decade, which is don't give up on TV. Do you still hold that theme?
No.
TV, it's like finally done?
Yeah, we're over. I mean, I wrote something yesterday, earlier this week, where I calculated that the total amount of TV ad inventory is going to fall by about 24% at least under conservative assumptions.
Where's it go?
It goes away. People don't get as many ads going forward because even if people subscribe to an ad tier, they're not going to get the same ad loads, but not that many people are going to subscribe to ad tiers in the first place. They're going to take the increases in prices. They're going to cut their pay TV subscriptions to fund it.
When you look at this, and on a broad sense, Michael Mabusian, 17, 18 years ago, on the concentration of digital product, are we just going to concentrate down to 2 or 3 survivors?
I think that that's possible. I think there's going to be 4 or 5 more likely, just a lot of very low profit players. But here's the big thing a lot of people aren't thinking about, that most of them can be global if they bother to invest in it. Netflix will, Disney will. We're not sure what Warner Discovery is doing. We're not sure how much Comcast will. They are. But I think that's the big thing, that they can play at a global level. So low profit, but double or triple the revenue. That's still a good business.
Do you remember the death of the PC?
Oh, yeah.
And it used to be that line that every person who wrote that headline wrote it on a PC. Slightly ironic, we're talking about the death of TV on TV.
On TV, yeah.
What lives on?
Well, to be
News,
clear,
sports?
Paid TV keeps growing.
Okay.
People will pay for it. It's advertising on television that is going to continue to decline. But consumers will pay for it.
So let's go to the Walt Disney Company. Where does it leave them and what do they do?
That's such a mess. I mean, here's the thing. Separating the network and the stations is kind of ridiculous. Separating the stations makes sense. You don't need that legacy infrastructure. Think about how you're going to position this company to merge with someone else. Having a regulated business like the broadcast stations combined with the network makes no sense, firstly. I don't know where they're going to go. They don't seem to have a very clear true north like they used to in 2018.
What do you think Iger was doing then? Just saying, come to me with some ideas?
I think so. I wonder, I have a theory that he was getting really good advice from a team he'd built up over the course of 15 years prior to 2018. You could tell they had clarity in what they were doing, and if they stuck to it, maybe it would have been worth less than it was in 2018, but it would have been a great 50-year business. Now, it's strategically all over the place. Are they going to split ESPN? What about A&E? I mean, there's all these businesses that they just don't have clarity around.
Lisa, help me at your house. In my house, nobody watches Disney Plus. They're glued to Netflix. Is that...
Yeah, but how old are they, right? I mean, how much is this a demographic issue?
Can Disney survive on the kids, and that?
To be clear, there is a very direct relationship between share of spend on content and share of viewing. Sounds kind of obvious, but if you increase the amount you spend on content, you'll get more viewing, right? And so if that follows, if Disney doubles the spend that they have on actual programming, they will get more viewership.
When's there the pushback point? When you do have consumers that say, I'm not going to pay for that. Have we seen anyone breach that? Or is this basically the sky's the limit? We're going to be paying, $1,000 a month for our entertainment.
You're hitting on some things I thought were kind of obvious in 2018 when I had a sell on Disney back then. But the point I was making was the cost for these services will be so much higher because you're going to churn. So Netflix can raise their prices 15%, but churn is going to go up too. Marketing is going to go up. The content delivery, of course, we're always going to be higher.
When you talk about churn, this basically means that people are going to leg in when they see content that they like, and they're going to leg out when they don't.
Consume the Beckham series and get out when you're done.
And Suits repeatedly, like Tom and John do every night. But I'm curious, religiously, about whether we also learn something from password sharing, and that crackdowns on that do not lead to a drop-off in revenues. In fact, you just capture more.
Yeah.
Is this going to lead to a broad policing of all the people out there who are still using their parents' subscriptions when they're 33?
I think so. And the more aggressive that Netflix or any streaming service is in doing that, again, it's going to lead to higher prices paid by consumers. But again, there's this pool right now of $100 billion being spent on legacy pay TV services. It's only $30 billion being spent on streaming. That's a lot of money to shift.
Tom and I talk about the bundle, the return of the bundle. What does the future look like? Is it the past?
I think it will look a lot like the past. I've called it John McCain's dream, right? Remember when he was in the
Okay,
House?
explain that.
Okay. 2003, right? He was chairman of the House or the Senate House Energy Committee. They were trying to create an a la carte world. Do you remember this? Basically, they were trying to make it possible so you could sign up, sign off for a given network. That was a big deal in the cable industry. People like me, I was a cable analyst at Deutsche Bank at the time. We were saying, this is crazy. It's going to actually cause a worse business. It's going to make consumers are going to pay more, less marketing, less diversity of content, blah, blah, blah. Well, here we are, 20 years later, and we got it. It's just at a slightly more aggregated level. But it's not positive for the economics of the business. Consumers might feel better about it, but they're going to pay more for the privilege.
What does sports do? I mean, sports is still mega bucks. It seems to me that's all people watch, sports and the weather, and Bloomberg surveillance. But what does sports do?
Sports is in a real worry right now because if basically the only people who are going to access sports are going to be those who keep with the pay TV bundle, you've got to really like your sports because you're going to be paying $150 or $200 a month.
Exactly.
And I don't know.
John's up at $500 a month for English football.
Disney put out AK last night with breaking out ESPN for the first time. Fun reading, just to see just exactly how big it is. It's not a shocker on the sizing, but they're positioning to do something with that asset, which they probably should. Sports is the problem is sports risks going the way of boxing, right? Not that bad, but in the way that boxing used to be this broad-reaching thing that everyone accessed and consumed, and then it became pay-per-view, and then it stopped having casual fans.
Some of us had pro wrestling. And gorgeous, you get to the weekend just so you could watch 30 minutes in black and white.
I wish you could see Bramo's face as he's discussing pro wrestling.
Gorgeous
You do not watch pro
on
wrestling.
A serious note,
Gorgeous
on a serious
George
note,
was like religion, and then the Sheik came along.
There's a very interesting negotiation taking place in Italy with Italian football. There is a push by some of these leagues to go direct to the consumer, not to sell the rights, but go direct to the consumer. And I think you alluded to that slightly with boxing.
Yeah.
Is that the future for American sports?
Yeah, I think many of them are going to end up doing something like that.
So the NFL is going to have its own network, its own TV network, and just pushes the game straight out.
To be clear, they will still prefer to sell to multiple rights holders, and those multiple rights holders will end up pricing it very high. Right? But the point is, if right now 50-60% of the population might consume a little bit of sports, half of those people are passionate about the sports, half are kind of indifferent, that indifferent group won't pay.
There's a bigger question underpinning that, which is how much of the money goes to the content creators, right? The sports members, the athletes versus the writers versus artificial intelligence. Is there a sense that a greater proportion of the money will go to the creators?
Isn't this the perplexing thing with the strikes going on? The amount of spending on content has only gone up. Now, I think it's actually the showrunners who've been benefiting disproportionately, the Jerry Bruckheimers, the Shonda Rhimes, et cetera. That, I think, is where a lot of the money is going, and the distribution of talent around the world. I mean, think about how many people in England are now acting in a series running in the U.S., right, as an example, or all over the world. The talent has been distributed, and so the spending on content has been spread out. It's like a lot of other industries where we see offshoring in agencies or in other industries. It's the same thing for Hollywood. It's just the people in Los Angeles aren't necessarily the beneficiaries.
I saw you pointing to me then, an Englishman acting in a series.
Exactly.
In the US, is this acting?
This is Suits.
Kind of.
This
Suits.
is the Bloomberg Suits.
That's what it is. Don't worry me, Bramo. Are you Meghan Markle?
No, please.
No, okay. Bram Weiser and Madison and Wall. Is that an offensive thing to say?
No.
Okay, all right, interesting.
Let's just move on. Look at those bonds.
Look at those bonds, Brian. Good to see you. Coming up, we'll go to Tel Aviv for the latest with Bloomberg's Oliver Crook. Then we'll catch up with Cameron Dawson of New Edge Wealth. Let's turn to this bond market. Shaping up as follows in a treasury market in America. Cycle highs in the last 24 hours on a 2-year maturity, a 5-year, a 10-year, a 30-year. Your 10-year right now at 4 basis points, just south of 5% at 4.9535. Your equity market positive by not even 0.1% from New York City. This is Bloomberg.
Politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Keeping the faith in billionaire Warren Buffett. The legendary investor turns 93 this August. His signature must-read letters to shareholders have been getting shorter and shorter. This year's letter contained few fresh ideas. But most investors in a Bloomberg survey say Buffett's steady Eddie approach of buying cheap, safe, high-quality companies will beat the market. They expect returns in his investment company, Berkshire Hathaway, to outperform the S&P 500 over the next 5 years, adding to an incredible run in which Berkshire shares have returned more than 3,000,000% in the almost 6 decades Buffett has led the firm. Investors are also willing to pay up for Berkshire, which owns everything from the railroad BNSF and car insurer Geico to See's Candies and Coca-Cola. About 1/5 quantify the Buffett premium at more than 10% of Berkshire's stock price. More than a quarter say it's somewhere between 5 to 10%. There is one problem for Berkshire Hathaway, its size. Thanks to a bunch of cash-generating insurance companies, Berkshire has at least $130 billion in cash that it can put to work. but it needs big acquisitions to move the needle. Buffett calls it hunting for elephants. And we know Buffett hates overpaying. So that means sitting tight, patiently waiting for the right moment to pounce on the right company, which might be a drag on performance for now, but as Buffett fans know, usually works out in the long run.
UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. The markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
Anytime you see rising economic and geopolitical uncertainty, that is bad for markets.
Are we going to see spillover effects in the Middle East? Are other countries going to get pulled into this? And you've seen actually markets repricing.
This whole year has been a year of a market that's been on its toes and on edge.
The S&P 500, the market is controlling its emotions.
I'm not surprised that we can